Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
All right. That's another way to think about it, right? One of the main reasons why we should be very cautious, because they are very cavalier and not caring about mismanaging your tax dollars. What's going on, everybody? Peace, power, and profit to you all today on this way back Wednesday. Today is FOMC. Actually, it's Fed Minutes Day, right? We call it what it truly is. It's Fed Minutes Day, right? Literally in about 5 minutes, we will get the Fed Minutes report detailing the extent of their meetings leading up to their typical, if you will, meeting for the month that's coming up here shortly, where they will discuss the need to continue, their gas pedal mandate of raising rates. I think we have a 75 basis point rate hike in the cards for this month of July, unless something changes. Wall Street will have to digest that if they haven't already, whether it's priced in or not. We will find out. Right, we will definitely find out, right? So hence the question of the day is, are markets able to take rate hikes, in stride, right? Because some will say that they are, then others will say, well, possibly, maybe not, right? But we will find out, right? Nonetheless, because markets are trying to figure out, is just how far can they go with all this economic, headwind value information becoming a problem in terms of them being able to solidify a bottom in this marketplace and build from a place where they can just stay, I guess, maybe neutral up until we get a lot of this rate hike, quantitative tightening flushed out of the market, right? But I would say that's a losing battle, right? It's almost, but it's the worst thing to be planning for, right? So as always, we've been very cautious in telling people to be very, prudent. Make sure that you are very conscious about, where you place your money. If your dollar cost averaging in, make sure it's notable in a stock that has a great balance sheet, money on the books, free cash flow, can weather these storms, so to speak. And hey, from there, do what's necessary for you to build wealth, right? And create wealth, because at some point we know this stuff is going to fade. And then the markets will kind of have a place where they can assess all the damage and start building from there. But as of now, it's too early to tell, right? It's too early to tell, right? So as you see, guys, we do have the link out there. If you want to come on to the panel, you're welcome to come on today. right? Again, happy to have you guys in the building. We have Open Chris already in the house today. Shout out to him today on this way back Wednesday, right? Go subscribe to his YouTube channel if you see him in any space that you're in. Chris Woods is his name, Chris Logic, right? Go subscribe to the tribe, be a part of the movement. We're pushing the value of, well, again, information over, disinformation, right? All right. We are the fact checkers that fact check the fact checkers, right? All right. So we are definitely, happy to be here and share in the wisdom of the markets with you. So as you see, again, literally about 2 minutes here before we hear the Fed minutes come out and detailing whether or not they're going to raise that 50 basis point or not. Oh, excuse me, the 75. Or they may just do 50, right? Maybe that wasn't necessarily a feuding slip, right? We will see nonetheless. And we'll see how these markets respond. But as of now, just kind of using this as a backdrop to what we were discussing yesterday when we went live and we discussed, certain levels of the marketplace here and detailing exactly what the market may be trying to accomplish in terms of, possibly trying to find a somewhat pseudo bottom, if you will, a short-term bottom. I think we kind of, came to a consensus to a degree. We're playing around at 375 up near 380 at this point. Anything below that would be problematic. Anything above that would be, I guess reeling the fact that the bulls feel like they got this double bottom right here at 375, 373, 374, if you will. Anything, again, at that point of support is risk on for us, the markets is concerned. And we witnessed that once before, right? We had this back testing scenario that came about after this last little move we had going back on June 30th when we closed out the month and the market closed down. As you see, the market just kind of pulled back right now. And now it's kind of fidgeting all over the place. So the minutes just came out. Of course, it's 2 o'clock. The minutes just came out. So that's why you see the market kind of fluctuating a little bit here. This is on the hourly chart. So it's going to be a little bit more methodical in its movement. Won't look so rigid unless I was looking at the 1 minute. As of now, there you go. You got the market spiking up here a little bit. Matter of fact, let me change the charts, right? Because you can see this kind of real-time price action here. Let's go to some of my smaller charts here so you can get a good detail exactly what the price action may look like here and whether or not, again, it's going to hold or not, right? Because more than likely, this is just that initial reaction before they really begin to parse the straws and see exactly what the numbers are detailing, right? As of now, the markets are kind of somewhat holding this, somewhat short-term, short-term value. Be it though we closed above 381.96 yesterday, we're kind of slightly below that as of right now. We got as high as right about 383.61 today. Of course, we had 384 on our radar potentially today. We got close, but not close enough. Of course, we fell short around about 40 cents in that regard. But nonetheless, the day is still young, if you will. 2 hours before the market potentially shuts down. Still enough time because we still have imbalances to kind of flush out. We have the power hour session at 3 o'clock, where traders can really digest what's going on. And that's it. So as of now, I'm reading that, watching Bloomberg here in my office here, they're saying that the Feds are signaling somewhere around a 50 or 75 basis points. So they don't have a concrete number nailed down within these FOMC minutes. And that's I'm not going to say it's unusual, but it is somewhat them, trying to signal to the stock market that they're still somewhat data dependent. I'm pretty sure they will use those words if they had the chance to, and that they're seeing some softening in some aspects of the yields coming down. We spoke about that yesterday as well, and we're going to get to that as well because we did have an inversion this morning, right? We did have a yield inversion this morning, right? So with that being said, again, this idea that, right, you got my little alerts going off right here, all right, as always on TradingView. All right, with that yield inversion, that definitely signals that there's more problems that they can't just overlook in terms of a recession, right? The 2s and the 10s, right? The most notable marquee yields inverted today, 2-year over the 10-year, right? The 10-year has been pulling back. There's no secret there. We kind of discussed yesterday that we may see a bottom on the 10-year, maybe around about 270 area, right? 2.7 value on that yield. And so today, we kind of saw it kind of marching up a little bit to the upside around about 2.8 and change, right? I had to go look at it in a minute here, see if it's changed, since then. But for the most part, that yield inversion definitely denotes that, the recession value of the growth, and the debt to equity ratio, and all the things that come along with you're seeing people feeling a little bit more skittish about holding that long-term debt. Really begins to signal that, markets are beginning to slow a little bit more than they were trying to say, let's say earlier in the springtime, that it was not so much of a big issue, that they will be able to land this plane softly, and that recession fears were no more than just hyperbole coming from a lot of people who did not understand the economics. And this was coming out of the White House, mind you. Janet Yellen, Jerome Powell, his camp, Fed governors, a lot of these, again, uber bullish, Wall Street analysts. And today, of course, they're singing a whole new different tune, right? It's funny how, that everything was all good just a week ago, right? Somewhat in their mind. Turns out the data says everything except what they're trying to, propagate, right? Of course, we're watching the yields. We've been watching the commodity markets. We've been trying to see exactly, exactly where we're going, into the back half of this year, right? So as of now, the first half been in the books, as of June 30th, really saw a lot of, inherent weakness that we were already forecasting. And it showed a lot of the, if you will, again, the idea that the Federal Reserve as a whole, the institution of, banking and finance and the whole nine, they were not as prepared for what what was really flushing through the markets in terms of commodity prices being very unstable, the Ukraine-Russia scenario not necessarily kind of coming to a head, and a lot of these other markets around the globe began to kind of circle their own wagons, right? They began to be very frugal in terms of how they were looking at America in terms of how they would do business with us, right? Why? Because I think they were beginning to really start to figure out now at this point that it is a dog-eat-dog world, and as much as they look at us as the kind of the superpower to somewhat emulate if they could from a democracy standpoint, but when it comes to business, they were like, maybe we need to kind of reevaluate that, right? We'll come back to the drawing board and discuss these things later, right? But nonetheless, again, we're here, all right? We're in the building. We're happy to have you guys in the house. All right. What's going on, family? Vin Faction in the building, right? Shout out to you. Shout out to our family Yoda in the house. We'll see you as well on YouTube as well. All right. Yeah, so today is just the minutes, right? When the minutes come out, they're just pretty much putting out a precursor, right, of what's to come when they do actually go into their meeting, right? The meeting, their actual FOMC meeting itself, right? So hence it's just more of the paperwork. It's the we're going to release our white paper, our roadmap in advance. And then next time we meet to discuss or actually implement rate hikes, then in last they will be able to kind of talk through those particular bullet points, right? So today there will be no speaking of Jerome Powell. However, there are Fed governors who are speaking today. They are definitely Fed governors, right, within this board who are speaking today, right? Some of them already spoke this morning. If I'm not mistaken, was it today or was it tomorrow? I might be wrong. No, actually, Williams spoke this morning. So Williams did speak this morning, right? Fed member Williams, he spoke this morning, right? And so, tomorrow we have maybe like 3 or 4 of them speaking tomorrow, right? So that'll be very interesting because, hey, this is when they kind of get on their apology tour and get out there in front of the public and say, well, it's not this, it's not that, it's, it's whatever, right? It's whatever, right? But we'll be definitely paying attention to that as well. Again, just kind of putting out some of the information I'm seeing popping up here on my news feed here with my notification push. I'm gonna post this in the back chat, some of the information with them somewhat signaling, rate hikes, right? They're trying to get this story somewhat in control because they've been very wrong in more ways than you can imagine. And so they need the public to somewhat, fall in line a little bit to exactly what they're doing, right? Given the fact that their credibility has been kind of thrown under the bus. We talked about that before and how detrimental that was and what that looked like, amongst, a lot of other economists who put a lot of faith in the Feds in terms of their stock portfolios, right? Their investment thesis. And now, they're kind of really, really eating a lot of bad, bad losses right now. And that's weird when you thought about it from a place where, like, were they not looking at the same thing that we were? Were they just really that naive, right? Or maybe they're just that, again, bullishly cavalier. But nonetheless, they are definitely eating a lot of bad losses right now. And so as of now, again, it says Fed members talk up front loading rate hikes to extinguish red hot inflation. Of course, it's just based upon the Fed minutes that just came out. And it's saying, so let me get over here real quick and just share this real fast. Hey, but Sonny, I think you're trying to come into the building, fam. You might have to go out and come back in. It's not allowing me to add you in for some reason. It's showing that it's not allowing me to add you for some reason. So maybe it's a connection issue or whatever, right? But real quick, let's run over here and check out the some of the data, or I guess maybe the news surrounding this ideal of rate hikes, right? So as you can see on investing.com, one of my favorite websites, right? One of my favorite websites. It says Fed members talk up front loading rate hikes to extinguish red hot inflation, right? We know red hot inflation is literally the the paragraph of the year, right? Right? Or the soundbite, if you will, right? If there ever was one, right? It says Federal Reserve policymakers favor front loading rate hikes to rapidly move monetary policy to restrictive stance to extinguish red hot inflation. And the Fed's June meeting minutes showed Wednesday, right? Of course, no secret here. We were already, seeing this coming into the light. They had got to a place where they were trying to slow walk rate hikes with these little, very, very, infinitesimal 25 basis point rate hikes. When you're trying to fight literally 8% inflation with a quarter basis point. I mean, like, seriously, like, are you just think we're that silly and we that naive, right? So I think, it began to be an echo cry around the citizenry, hitting up their public service members and the president and so forth, and like, wait, are you guys serious? Are you going to fight inflation with this level of, ridiculous rate hikes, right? Even though, no one really wants rate hikes, but the only way you're going to fight inflation, things that hurt people the most in their real-time spending in terms of fuel and food and energy, yeah, you may have to put a damper on demand. And the only way you can kill demand, right, is to raise interest rates, right? Make things a little bit more unobtainable in an instance where a lot of even the wholesalers or the distributors of these items as well, or these services or whatever, can begin to pare back some of that, price hike value of margin that, forcibly make people kind of have to take exactly what they're offering, right, at higher prices. So when you kill demand, that slows spending, that obviously flushes the system out of any excess. They have to drop prices. Basically what's happening with Target right now, Walmart and Target are having to reduce their inventory prices substantially a lot lower than what they would have been using to add more margin price rate values, or actually raising the prices on those goods, given the fact that the market would have been able to sustain it and deal with it longer than, before we pretty much just kind of crook, right, or crack, and then everything just bottom fell out the marketplace in terms of the consumer spending habits, right? Which showed recently with the Michigan consumer numbers that, we're definitely beginning to be a little bit more tight wallet, tight purse. We're not spending as much on discretionary items. We're buying necessities, more than average. So it says a lot about where we're going into the back half of the year, where people may be a little bit more frugal with their spending, and that's to be noted, right? Of course, why wouldn't you, right? All right, so the market's definitely pulling back a little bit now after it spiked up a little bit. Again, I'm getting alerts popping up in my ear right now, so that's why I'm speaking to it. All right, so if you are watching the market, I'm pretty sure you're seeing all this volatility is up, down, sideways, it's all over the place, right? Typical markets, right? All right, got to get used to this stuff, right? Yeah, so yeah, it was corrections. Say corrections happen all the time. Yeah, that's exactly what's going on right now. It's definitely all over the place. And the markets are trying to again make sense of, where are we, right? Are we going to be in this low position where we're going to stay sideways, somewhere in this channel? At this point, we have a low of 362. Of course, we know that we do have the high at 480, right? But I would say, again, I think the entry year high, I made this declaration before, the entry year high, in my opinion, is around 462, right? 462 is my opinion of the entry year high. Unless that changes, I will kind of keep that kind of, perch point up there until that, changes, right? So shout out again to, Jerome Powell, making it always, interesting to trade this marketplace, right? Giving a lot of his, commentary and how he kind of colorizes the scenario that it's not as bad as it is, even though things like, okay, this is not great. All right, but whatever, right? They got to do what they got to do, right? They have to do what they have to do to make this stuff make sense, right? So again, as you see here on the board here, really quick here, right? And then my alerts just going off left and right, man. I tell you, this thing buzzes in my ear. in your headphones. It says, in discussing potential policy actions at upcoming meetings, participants continue to anticipate that ongoing increase at the target range for the federal funds rate would be appropriate to achieve committee's objectives. Right there we go with that same. That right there is like the most popularized paragraph that the feds use more than anything, right? Right, this objectives committee, all this, whatever, like whatever. Right. So in particular, participants judge that an increase of 50 or 75 basis points would likely be appropriate at the next meeting. Now, when I said, earlier that this is the kind of, the ambiguity, right? This is where they have a little leeway, right? This is where Wall Street will take this and say, you know what? We were pricing in 75 based upon the future Fed fund rate, right? We've been watching that thing tick up more and more. I think it got up as high as like 85%, 75 to 85, near 90% in terms of people thinking all but certain that we would have at least a 75 bip rate hike, right? 75 basis points, right? Basically 3/4 worth, right? Now that the Feds are signaling that it may be possibly 50 or 75, right? That 50 bodes well to Wall Street. Why? Because in their mind, again, even though they know we need to fight inflation, but they say, well, they're softening in around the inflationary lane right now. Commodity prices are coming down a little bit in certain areas, right? We do have, softening in the oil market, as we saw oil pull back just recently. We have softening, of course, in some of the energy sectors, natty gas, things of that nature. They're pulling back a little bit. Wheat and food on the wheat side of food side of things is pulling back a little bit on the agricultural side of things, which is some of the hardest things that are, really, hurting consumers, right? But y'all know as well as I know, as investors or basically traders, right? When you think about, when these certain, I guess, assets pull back, right? When they're someone, then they kind of proverbial pullback, that somewhat doesn't necessarily tell the whole story. And whether or not, this whole movement to the upside and higher prices in gas and commodity prices, wheat and soybeans and rice, doesn't necessarily mean that it's over, right? We understand this, assets like those pull back just like a stock like NVIDIA or Apple or Facebook will pull back, or Meta, right? Whatever, right? And then they collect new buyers, and then up to the back to the upside they go, right? So it's not a moment to signal the all clear. However, Wall Street will again say, well, you know what? This is a sign that, maybe inflation is peaking. Now, what's funny about this time around, they're very, very cognizant. They're very slow to say that, commodity prices have peaked, right? Or inflation has peaked. Now they're using terminology more so like, well, okay, it's slowing down a little bit, right? It's starting to slow a little bit, right? And hence they should have been saying that the first time, right? But they just jumped out the window literally back in March, right? March and April, they were signaling that, that we had possibly peaked. All this stuff is behind us. Again, all this FUD that people were saying is wrong, and turned out they were wrong, right? They were just a bad read on the marketplace. And because of that, a lot of investors who followed those, the likes of those TV analysts or whatever, they suffered at the hands of being able to buy these stocks at a higher price when they could have got them a lot cheaper, right? And that's just the nature of the business, right? You got to make sure that wherever you go to get information, or however you're able to interpret this stuff, you need to be able to really unpack it, right? I literally falsify all the different variables out there, because we use a lot of that kind of terminology over here, right? We like to go through the tea leaves, sift really, really, finally through the tea leaves and figure out and flush out, what are the problems or the variables that may be out there lingering that could put a, somewhat of a stop, on the, the push, or at least in this case, from the market for kind of having to deal with all this extra headwind information, right? Once that stuff kind of again moves through the system, then you can say, well, I may can start kind of nibbling into the marketplace, comfortably, and not necessarily have to worry about, some bad academic data had, hiding around the corner, and then take them out, take them a block off, right? So yeah, these are times we just want to be patient much as possible. And just again allow the talking heads to to get through their campaign of crying and begging and whining and making excuses for this or for that, or whoever they're going to blame for the economy slowing and whatever, right? Once that stuff really gets out the way, we call that peak media, right? When you get to a point where all the peak media FUD is somewhat kind of priced into the market, or it's kind of starting to dissipate, I think then at those moments you can start focusing on putting together some different, better, outlooks or strategies or, a thesis, if you will, to start kind of nibbling into the marketplace, right? Because now, people won't be so, emotionally hinged on all this knee-jerk reaction commentary coming out of CNBC and Bloomberg and Fox Business, whomever, right? Wherever you get it from, it'll somewhat be quelled a little bit, right? So that's important, right? So that's very important, right? So really quick, so it says at the conclusion of this previous meeting in June, right, on June 15th, excuse me, the Federal Open Market Committee raised its benchmark rate by 0.75%, to range of 1.5% to 1.75%. So at this point, of course, we're sitting at about a 1.75% increase since the bottom, right? Since the very bottom when we're basically near at zero interest rates, right? Due to COVID, all this stuff, right? Now that we're kind of, starting to incrementally raise rates, in the grand scheme of things, of course, we're saying, a small value up against the real, I guess should say the the degradation of 8 or 9% inflation readout. But this is enough to somewhat fight inflation, like 1.75%. Are you kidding me? Like, are you kidding me? Right? And yet still they had the nerve to put in this little last paragraph here. It says, well, it was the largest Fed rate hike in single meeting, basically in a single meeting since 1994. As if they really doing people who have to go to the grocery store and pay these high prices or at the gas station, whatever, any favors. I mean, this is the lunacy of, again, when greedy people are in charge of policy and they refuse to kind of, again, really, really do what's necessary to help the American people, at least the Main Street side of things. It's like pulling teeth to get them to admit that, they're looking at it all wrong, literally, right? They're looking at it all wrong, right? They're too busy trying to protect asset, owners, if you will, and not necessarily as a bad thing because I'm an asset owner, right? Up and down the chain, right? However, but I do realize on a blanket level, it makes it harder even for Main Street to be in a position to participate if they're always backpedaling because, bad policy, less money, less capital, less, equitable, employment levels, out there for as, increasing their pay, whatever. Again, you need everything to kind of work in unison is my point. If that's not there, then yeah, we're going to have problems, right? We're going to have problems, right? So it says, going forward here, it says the move caught some by surprise as the Fed had previously ruled out a 0.75% hike. Now, this is weird. Now, they could say that now in hindsight, but it was almost clear at the last meeting that like the ideal of them, ruling out 0.75, percent value of a rate hike was just, ludicrous, right? Now it's like, okay, that's you can just throw that out the window, right? You can't even use this sentence anymore because the commodity prices signal something totally different when we got the CPI data readouts that came and just showed that inflation was still back on the upside swing, right? So yeah, like stop that, right? Stop that. Stop trying to juxtapose the fact that the Fed need to do more to fight inflation with the idea that they're just kind of really weighing if they should do more, right? This is the kind of hyperbole I was talking about. But anyway, all right. Anyway, all right. It says Fed Chairman Jerome Powell flagged incoming data showing inflation continuing to flirt with its 40-decade highs as the key drivers behind the central bank's decision. Right. Again, it's not that they can't do anything to stop this, right? Unless they really get serious about really raising rates. Why? Because they can't print oil, they can't print wheat, they can't print iron ore out the ground, they can't print wood, they can't print those things that often affect the commodity markets that causes all this, demand value to kind of stay, somewhat elevated, even though it's kind of pulling back a little bit, truth be told, but it's not enough, right, to stop, the ideal of, at least inflation being stagnant up around 7 and 8% value, right? Even though we know it's much bigger than that because they don't really necessarily use the proper, inflationary measure tools to give you a true readout on inflation because they strip out energy and food, which is the biggest cost you incur, which is laughable that they do take those things out because they say, well, it's volatile. Well, it doesn't matter, volatile or not. This is still what I'm feeling at the gas pump, what I have to pay at the grocery store. How dare you take that out to try to make it be somewhat of a softer reading so you could be very, cavalier again and not wanting to raise rates, right? They're cavalier not wanting to raise rates, right? Which is weird, right? This is the game they play. All right. So going forward, it says the Fed's handiwork, some say has begun to have a desired impact. Yeah, whatever. Tightening just really started, guys. So like whatever. So QT just started. So we'll see as this goes forward if that really is the case, right? So it says tightening financial conditions have sapped aggregate demand and helped cool inflationary pressure. So this is that campaign where they're just going to talk the market down as opposed to actually implement policy to bring it down, right? They made it very clear in one of their last, I guess if you will, they were doing a news conference, I think a while back with some other central bankers. He was speaking about, of late, they just been able to be very happy about the fact that they're talking about raising rates. And because of that, the bonds are already starting to kind of retreat, right? I mean, the bonds are being sold off, yields are going up, right? They're causing the market to kind of do the work of the Feds without the Feds actually doing any work, right? That's essentially what they've been doing. And to them, that's a win, right? Because they really don't want to take money out the system. You could tell it's like they really are fighting to not want to, to not do this quantitative tightening as they should, right? Again, they got all this money on the balance sheet, right? Sitting up there in the $9 trillion of literally, just printed money just out, literally. It's crazy when you think about it. But they still are having problems with pulling that money out of the system, at least enough to kind of kill demand, right? So, yeah, that's what happens when you put people in charge of your money, and they have a hard time in being really very, neutral and understanding the degree of what everybody's going through, not just those who are wealthy, but even the people who are on the bottom rung as well that need more help than usual. All right. But anyway, so it says the 5-year inflation break-even rate, a key measure of inflation expectation over the next 5 years, fell to 2.502%. It's lowest since September 2021. Right. So again, they're just utilizing these things to kind of figure out, where would they be if they could, consistently keep this damper on the demand side of things, and we can kind of pull inflation back down towards their mandate, if you will, of 2%, which is kind of goofy because ain't no way in the world inflation going down to 2% at this rate. Right, housing market is next to fold. Right, we already know that everybody keeping their eyes on the housing market because if that goes, so goes really and truly the bond market. Right, let's be keep it 100. If the housing market goes, bonds are really going to be all over the place. Right, even though we had a 2 and a 10-year inversion today. We'll speak to that a little later, but it's just signaling a lot of what we already know. Right, it's signaling what we already know. All right, so this kind of coming down a little bit. It says what I guess these are words of Jerome Powell. He's saying it's gotten harder, right? The pathways have gotten narrower to deliver a soft landing. So this idea of a soft landing, we've been debunked this, right? We actually went to their website, the Federal Reserve in New York, and pulled out information detailing that this was all of, a big smoke screen, right? It was window dressing. We call it window guidance. That's a technical term for it, actually, right? They were doing a lot of window guidance to kind of make people, it seem as if they're going to have a big sale, fire sale, but ultimately, they were not really planning on doing it, right? If they had anything to do with it, right? But anyway, right, that's just more window guidance, window dressing. All right, but he says what? Nonetheless, that is our aim, and there are pathways to achieve that. Now, if he's still thinking that they're going to get this soft landing, right? Good luck. Now, this was, him saying this last month. Of course, I'm not going to take him out of context here, but he was saying last month, he may think that it's obvious that they make him pull it off, right? But at this point, a month after the fact, he's like, bruh, I'm not going to even waste my time saying that, it could be a soft landing, because he was saying if he's changed up his talking point since then, to be exact. He definitely has done that. All right. So yeah. Markets, particularly the bond market, have been pricing impending economic doom, which we were seeing that. Earlier this week, the yield of the 2-year Treasury bond briefly jumped over the yield of the 10-year. It actually happened today too. Right. It happened today as well, making an inversion in a key part of the yield that usually spells trouble on the horizon for the economy. Right. Again, no secret there. Just being students of the game, it matters because you need to understand how this market works so you don't find yourself in a bad position. Right? What I mean by that, you don't find yourself, again, really getting too comfortable and thinking that these people got it all together, because apparently they don't. Right? Apparently they do not have it all together. And they're signaling that they may somewhat, are in a position where they may can pull off a soft landing, but it's like almost but certain that I don't think that's going to happen. Right? That's just from my vantage point. I just don't see it happening. right? So yeah, we'll let them talk and we'll just do the opposite, right? Right? We will do the opposite, right? What's going on over Brandon? We see you in the building. Peacebound Prophet over Brandon in the building, right? Our resident hospice in the house. What's going on, fella? Be humble in the building. Our brother Sean in the building. Peacebound Prophet to you as well today, over. Shout out to brother Mathis in the house. I see him as well. Happy to have him in the building as well. Again, the family coming through today. Again, always blessed to have my peers, right? My equals, right? My brothers and sisters in arms, financial arms in the house, because we're doing this as a community as we should, right? It's not about, one particular scenario or other. It's everybody equal in this fight to get better and better ways to build the level of autonomy that we all should desire, right? As free thinking, beings of this rock called Earth, right? Right. So shout out to you all. If you are an entrepreneur, if you're sovereign in your own mind and own right, shout out to you, right? Entrepreneurs, go-getters, investors, and traders. You already know we're a special breed of people, right? People, have no clue exactly how, we spend a lot of time trying to crack this oyster, because we do want to be a part of the financial freedom fighters, right? The financial freedom fighters. That's a t-shirt moment. Matter of fact, that's a t-shirt moment. Financial freedom fighters, right? Right. We always have our little t-shirt moment. But shout out to you all day again on this Way Back Wednesday. Happy to have y'all in the house as we go through this data here, right? As we go through this information, in essence, try to figure out, exactly what are the Feds trying to signal going into the next meeting that we have coming up, basically around the middle or end of this month. Again, if they're going to try to push this 50 basis point rate hikes now, man, look. Now, y'all know if they pull that trash, man, Wall Street is going to go crazy. Right? They may be trying to stack the deck to do such a scenario, right? And they'll say, well, it's only, a quarter basis point from what we might have thought we should, could have did. It's still enough, right? It's still within somewhat of within the same timeline of what we were planning to do anyway, because we already had signaled, 25 in the very beginning, 50, then another 50, and then possibly another 50 or a quarter basis point. And then by September, we would kind of pause, right? That was the initial scenario before we got that last CPI data that came out, hotter than expected. That changed everything, right? It was all good just a week ago. Now they can say, okay, even if we do pull back, and lower it towards at least, 50 basis points, in July and possibly August, we can do at least another 50 or a quarter. Then by the time we do get to, September, at most, we could possibly signal doing like a quarter basis point, as opposed to doing nothing at all, which Wall Street exactly had banked on about a month or two ago. There was like, basically by the time we hit September, the Feds they would have to stop raising rates, because at that point, the economy should be in shambles, right? We should already be, deep into the recessionary, fog at that point, even though we're technically in one now, even though they will never come out and say it, but we know we're in one, right? Like, we know we're in a recession right now. We've been called that, right? But we'll play the game, right? We'll play the game. We'll let them kind of, be slow to, to being truthful, if you will. But we will still be planning in advance. That way, at least, we can protect our houses, right? We can protect our financial houses by being ahead of their ignorance, right? By being ahead of their, their ability to be late, right? All the time, right? And that's just sad, because again, we've seen a lot of investors who bought that first, lie that everything was all good, right? When people starting to buy Apple again at around about 160, all right? They was buying Tesla up again over 1,000, near 900 to 1,000. Right? They was buying Netflix up there near 300, 400, right? You couldn't make this stuff up, right? And then, the bottom fell out the market again. Like RIP to those people, man. Sorry that they went through that, but RIP to them, right? Because apparently they didn't have nobody around them that loved them, right? When people they must have had nobody to love them, right? Love on them, because they just, they just all over the place, right? Apparently they didn't have anybody that loved them that should have said, well, whoa, before you jump out that window, guys, let's think about this a little bit deeper, right? Let's go check the bonds, right? Let's go check the treasury yields. Let's go check, a lot of these commodity prices and see what's really going on here, right? Let's go, do a deep dive on a lot of these, forex currency pairs and see exactly what these other nations are doing. If they're bigger, allies of us, of ours when it comes to import export, if they're able to still produce at a level that we need or require, if that's a softening aspect there, that may, not necessarily do well for us, their currency up against ours. And that's just more problems that we're dealing with in terms of these kind of silent taxes, right? The same way people say inflation is a silent tax, right? Tariff, obviously, that's another one that's a big issue that's still actually on the table, right? We still have those tariffs in place that Trump put in place. And man, breaking news real quick. Breaking news, I had to stop talking real quick to show y'all this. The market is starting to rip now. Now we have that delayed effect. The market is starting to rip right now. I got to get over here real quick and show y'all this because again, I talked about 384 being a level that we were already headed to. Again, literally yesterday I was telling you guys 384, we're headed to 384. And it kind of seemed odd to some people. They're like, maybe not. But I like, for the I guess maybe the ideal of the bottom that we had from a temporary perspective of 375 being given, holding into Friday. We got up to 381. Of course, we pulled back, Tuesday, of course, after the long 3-day weekend. And it fell, enough to kind of back test that point of support, if you will, even though we got in 373, because y'all know it's never an exact science. It's always going to be a little overshooting, spillage. But nonetheless, we call that as a nice little perch point to kind of, think about putting on a little risk in terms of call buying. And lo and behold, those calls are printing right now. Right, those calls are printing right now. Just kind of give you an overview of what that looks like on the bigger picture here. We were saying, at around this 373, 374 area, right? Anywhere around here up towards, basically the VWAP, that's somewhat was a telltale signal of a short-term double bottom. Risk on appetite possibly coming in, but be very, again, prudent in your stop loss value, what you wouldn't want to lose if you take on that position. Again, it's not a financial advice. We do not give that here. We only offer opinions. But again, we saw a nice little moment to kind of play into some of this bullish drift sentiment, right? Given the fact that the market is still trying to, number one, keep itself farther away from the lows, right? The new lows that we have, the 52-week lows of this year, which is around 362. But also play back towards the ideal of maybe closing that, that final gap, right? We got one more gap that still needs to get filled, up towards that 399 area, right? 398. And then from there, we'll see where the market goes from there, right? Matter of fact, just kind of backing out a little bit here, just kind of give you an idea of what we're talking about here. So you see this gap back here, right? This gap right here, right? That's the last gap that Wall Street is definitely hoping they can fill here. Matter of fact, let me get my charts caught up here. All right, so we can still see it in real time. They're trying to, again, at least get back to that place. If they can get back towards 400, then they can decide whether or not this is enough to kind of, weigh their options if they can take this market a little bit more higher. As of now, though, we've crossed over the 20-day moving average here on the daily chart, right? This blue line here is the 20-day moving average, right? This is a bullish signal. Now, of course, that's still intraday. This is still intraday. It has to close above it. Y'all know the rules, right? You guys know the rules. We have to close above that of that 20-day moving average, right, on the daily chart. If that happens, then yes, we can possibly get potentially more drift to the upside, even though we still got to do a lot of dodging, a lot of economic data still coming at the back of this week, right? It's weird to say that even though it's Wednesday, right? It's a short week. But we got big numbers coming out tomorrow to pay attention to, and we got big numbers coming out Friday for economic data that we need to pay attention to, right? So, yeah, we're not in the all clear yet, right? So, don't jump out the window too much, right? Do just enough that you feel like is necessary for you to manage your risk, and then we'll let the chips fall as they may after that. But that's again, the market took a nice little turn, swung to the upside here. I saw my calls exploding here. I was like, man, looking over here to my left. To my right, and like, man, my money is shooting up over here. Okay, all right, let's go. Right, let's go. All right. So as of now, we're just gonna see where this thing going, where it's gonna close. Now, favorably, it'd be remiss even but I doubt I'm not gonna even put that out there. Right. But yeah, on a daily chart, of course, the first hard line of resistance is gonna definitely come at around this 387 area. Right. Now, if they find some way to take it was about an hour and 30 minutes left for the market close today. If they find some way to get this market, at least up towards 385, right? Not saying it's going to happen. If they can get the market up towards 385, then that'll be a great, again, launching pad to test that 387 potential tomorrow, right? So just something to think about. Again, we'll see though. But as of now, the market is fighting. It's trying to, take out at least the 20-day moving average. Bullish signal for a lot of the bullish, traders out there. Of course, they can utilize that as momentum. And from there, we'll see how the chips fall, right? We'll see where the chips fall from there. All right. So yeah, so that's it. So again, just kind of putting some context to it. Again, the day the Fed minutes definitely released some kind of tension for a lot of these Wall Streeters of the like who were thinking that, you know, it could just be 100% outright 75 basis point rate hike. Now they're starting to feel a little different, possibly thinking like, okay, well, dang, shucks, maybe we could end up with, you know, only 50, right? If we only end up with 50, that'll do really well for tech, right? Tech will really rip, like the QQQs will rip if they get, you know, anything less than more, you know, carnage for them, right? Because they're trying to navigate higher interest rate, you know, that cheap money is dried up and they can't really, you know, rally on, you know, low interest rates any longer. They have to really improve, you know, their worth by putting out what good products or good services, right? You know, and that's just what it is at this point, right? There's no kind of freebies out there at this point in the stock market. And so, yeah, everybody has to earn their own keep. Hence, a lot of these stocks that were just darling, budding, you know, up and coming, you know, spectacles, they've all faded or at least gone to zero, right? A lot of these SPACs, right? They gone to zero, right? Or they just based all over the place doing nothing. A lot of these unicorn type stocks like DoorDash and Uber and Lyft and all that stuff, they just really gave up all their gains. Yeah, man, it's funny watching all these stocks when they were sitting up in there like DoorDash per se. I think they got up as high near 200 some odd dollars. DoorDash was up near 200 some bucks, and now it's only like what $56 a share. Let that marinate, right? Like this is the lunacy of the marketplace again. So again, as you all know, you know, when these things are happening and you say, okay, the stock doesn't pull back 30%, 40%, 50%, and the first thing you come to your mind like this stock is cheap, and then you ask yourself, is it really cheap up against everything we're dealing with for the stock market? Higher interest rates, quantitative tightening, a rebalancing of a lot of potential overvalued high PE growth stocks that have yet to really produce the natural timeline of consistent growth and profit revenue. Are those stocks really attracting at a point in this market starting to kind of show a lot of weakness where people will be very cautious about where they spend money? So you got to think about those things, right? You just can't jump out the window just because the stock pulled back 30-40%, right? This stock's even like beat down more than that, like 70%. Like that was like big high flying stocks that everybody was buying when the getting was good, like the Cathy Wood type of cadre, right? Her whole portfolio is like, you know, in the trash right now, right? She was buying all those stocks way up there at those higher prices. So yeah, y'all might want to be cautious and just, you know, buy you some time and just be patient. Let the markets get cheap. Let it get, you know, flush out all this weak hand stuff. And then you get excited, right? And then you get excited about getting the bag, right? That's just my opinion, right? That's just my opinion, right? So yeah, as of now, again, you see the market ripping up here. Again, hit all of our levels that we said. We told everybody that the market was going up towards 384.60. We told everyone yesterday the market was going up towards 384.60. What do you see right now? 384.60, right? So shout out to you if you ringing the register right now on those calls. If you bought them yesterday, you swung into today. Of course, that was just our opinion. If you did buy it, you know, of course, that responsibility lies on you, but you're definitely ringing the register right now. You are ringing the register right now, right? Even though you kind of had a little softness in the morning, kind of, you know, caused you a little apprehension and fear, but, you know, you sweated it out. Now you're reaping the benefits, right? All right. So shout out to you all today. All right. So that's what we're looking at as of now, guys. Again, the market here is, you know, digesting those Fed minutes. I can almost but be for certain that when I say that, this pump right here is a lot of it has to do with the idea that that 50 basis point, you know, cut is back on the table, right? If the fact that the Feds put it in there, the 50 or 75, it makes Wall Street feel a little bit more comfortable that they may get a little bit more less hike energy in the marketplace, which bodes well in terms of the PE values, right? The valuations are based upon these rate hikes in a lot of ways, right? And lesser values in regards to that gives them time to kind of work through their issues, you know, as a company, softening, you know, whatever the case. So that way, it won't seem as if they're overvalued, right? Because that's basically what those interest rates measure up against their valuations in a lot of ways. So this bodes well for Wall Streeters who are saying, okay, yeah, maybe, you know, when earnings cycles kicks off, you know, another week and a half from now, and we begin to see these companies, you know, lowering their guidance, because it's almost but certain that we're gonna have a lot of stocks lowering their guidance, right? Make no mistake about it. It's gonna be a lot of stocks lowering their guidance, right? And you may start seeing people come out early, literally between today, the weekend, and next week, and they're gonna kind of try to come out and front run their earnings, right? They're gonna give guidance in advance, right? So that way, if the stock does pull back, it get it out, get it all out this system, get it out the way now. So by the time they do release, it won't be such a surprise. It'll be like, no, see, we was already telling you guys it's gonna be this and that and whatever, and yeah, right. So make sure you guys are aware of that as well, right? Make sure you are aware of that as well. Right. So we're going to make sure we talk about these things in a way where you don't forget. That's what we're supposed to be doing anyway as a community, reminding each other what to look for, right? What to look out for, right? So that way, again, we don't find ourselves, behind the 8 ball, right? It's just not, it's just not a good look, right, for our P&Ls, or at least for our investing thesis, right? So that's what we're looking at as now. So right now we got that rate hike, on the idea on the table of a 50 basis point or a 75. It's interesting because I would definitely like to know what your guys think that's going to happen when it do come out, right? 50 or 75, right? So matter of fact, if you want, you might could type it in the back chat. If you think we're going to get a 50 or a 75, if you want to, type it in the back chat. Maybe we'll come back and revisit this video once we do have that extra FOMC meeting, and we'll see exactly what the Feds did, or did not do. Right, or did not do, right? But yeah, 50 basis points on the table. Yeah, whatever, right? Whatever. All right. But anyway, Fed Minutes Day, guys. Let's roll some of that bean footage, right? Let's roll some of that bean footage.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
That's another way to think about it. In the immortal words of Jerome Powell, right? I forgot his middle name. I should have said his whole full government name, right? Right? That's another way to think about it. Did you flood the system with a lot of money? Yeah, that's another way to think about it, right? Right. Again, he took good notes from what Ben Bernanke, right? Ben Bernanke is his idol, right? If I had to really look at the Fed governors going back, it's way back, before we had a Paul Volcker, well, even say after Paul Volcker, I should say. Yeah, a lot of those guys been very wishy-washy, right? But yeah, I would say definitely Ben Bernanke is Jerome Powell's idol, because Ben Bernanke was print money under Obama like he was just a drunken sailor. Right? He made no mistake about it too. Like, I remember them old battles between him and Ron Paul. Like, y'all remember Ron Paul, right? The old school man. Ron Paul used to be digging it Ben Bernanke grill. Like, I mean, it was like brutal, like a wrestling match type. you know, the way they were just kind of grappling with each other, you know, through their commentary, dealing with the fact that, you know, Ben Bernanke was taking a very cavalier approach to what, not necessarily trying to really balance the economy. They was really virtue signaling to a lot of what the Wall Streeters with a lot of the policies that was implemented at a time when American people like, dude, you know, we need, you know, we need some help. And dude was like, man, look, we trying to, you know, make sure we keep Wall Street happy. I don't know what y'all talking about over there. But anyway, it was just interesting, you know, looking back, you know, now today that those things are just, man, really great case studies to kind of go back and review and see exactly how these people have always had a problem with really, truly, in my opinion, doing the will of the, you know, of the citizenry, right? Meaning really getting a handle on, you know, inflation and, you know, the employment issues, things that really affect people on a day-to-day basis in terms, even, again, pay increases, right? Well, here we are in 2022, and they still have $7.25 as a federal minimum wage. 2022, you're sitting at $7.25 on federal minimum wage. Like, are you kidding me? Right? A bag of chicken costs $7 right now, I think. Right? Like, seriously, a bag of chicken costs you about $7 for one chicken. Right? That's like for every hour you got to work, you know, at a job, you just made enough to buy one bag of chicken. Like, let that marinate for a moment, right? Put it in simplistic terms, like make it make sense, brother African poor. Because jokers don't understand. Like, gallon of milk around about what, $3.50, and then $4 for a gallon, right? So you work a whole hour at $7.25 just to be able to afford, you know, maybe 2 gallons of milk. You gave that employer a whole hour just so you can have, you know, enough money to buy 2 gallons of milk. Like, bro, right? Like, bruh, like, it's that bad out there in these streets, right? Wall Street, man, I tell you what, it's brutal out there, right? Just like Buddy out there dancing in the corner, the top right-hand corner right now. They out there playing around, right? And it got serious, right? Till we jumped on that real, economic treadmill. Jumped on that, that economic treadmill, and guess what? Jugger went flying, right? Jugger went to flying somewhere, right? So it's real in the field, guys. So again, just be really, you know, ready to deal with this stuff when it all unfolds, because it's gonna happen, right? It is definitely going to happen. All right, what's going on over Sunday? I want to make sure I overlook you guys. Know I'm just going in a little bit. Hey, how's your day, man? I see you in the building, right?
I'm doing lovely. I'm over here listening, enjoying. I love the stock talk, you know. Whether I'm listening to it or I'm talking that talk. I love hearing it.
I'm with you, man. I tell you what, we need that reinforcement, man. It's great, because, and we think about it, imagine we had a play-by-play, you know, at our aspect of understanding the marketplaces in terms of, you know, people can come on and kind of speak a real, you know, clean truth about what they see in the marketplace, right? As opposed to all this kind of, you know, extra you get from a CNBC, right? We had play-by-play on our side. It would be so awesome, right? Right. Just like like a football player who made a great catch or something, and someone come back do a play-by-play, right, in the stock market. Like, yeah, ooh, man, that last counter right there was just devastating. Boy, look, boy, that's gonna hurt in the morning. It'd be something like that. They're gonna be like, yeah, bro.
Yeah, real talk is it's almost like if you watching a sports like a game or something. You know what I'm saying?
Fact,
Like when you get ready for the pre-market, then when the market opens, it's like the game starts. You know what I'm saying?
facts, man. And you know, it's weird too, because, you know, we're trading this stuff in real time, right? We're all over the place, right? We're trying to make sure, you know, we stay solid and everything, you know, looks good or whatever. And yeah, when them candles come out of nowhere, man, just throw your whole game plan into a flux. You're like, God, oh, bro, where this candle came from? Right? You can just see the look on our faces. That would be something very, right? We might need to look into that maybe one day, right? See if we can come up with some kind of way to do just that, possibly, right? So who knows, right?
I
Right. So
think
outside
one
of that, man,
thing
you go ahead.
I was gonna say, I think one thing about it is that we have to get people out of thinking that this is just a quick money scheme. Like instead
Oh,
of
fact. It's
actual
definitely not. Yeah.
investment where it takes, where it's over time you make money because there's a lot of money to be made if you do it right, and it's just on the
Fact.
page. You have to have patience and take your time.
Facts, bro. And of course, y'all know we are major and big proponents of education, right? Right, over entertainment, right? We're a major proponents of what? education over entertainment, because a lot of people will get caught up in the entertainment of investing, and it will make it to them it would seem as if it's what, like it's a kind of what, it's a coin flip, right? Or in some would say what, a gamble, right? And that's not what we're about over here, right? We've never been about that. We never will be about that, because this is a what, a marathon, not a sprint reality that we're trying to what, incubate, right? We want this to be something that we can look back 20, 30, 40, 50 years from now, and that just be the beginning, because guess what? We got children, right? Or family members want to pass down this stuff to, right? We want this stuff to keep working well into what, our demise. And so from there, the education has to take root. And the majority of people who think it's, anything except understanding it's a strategy and it's thesis involved, putting together thesis involved. There's a lot of what, fundamental information that needs to be what, understood. But before you even look at the technicals of this, understanding the nature of what markets are trying to present to you, right? The ideal of a company being around more than 5 years, 10 years, 20 years. Could you see well into the future? And if so, do you think they will have the level of potential growth, right? Or from a compound annuity growth, rate value, to say that this company is what, worthy of me investing in it, well into the future, right? Since we can always look back and say, man, imagine if our parents bought us shares of Microsoft and Apple when we were little kids, right? It'll be game over, right? They bought y'all shares of what, Amazon, whatever, right? Depending on how old some of y'all, but I guess in my time would have been like Apple or Microsoft, possibly some of them type, right? Right. But nonetheless, imagine what you'll be today if they bought you shares like so at least for your first 5 years of birth, they bought you the shares of Microsoft. And then after that, they start buying you toys and all the other goofy stuff, right? Right. But again, just the idea of that. Now, some of you guys got kids now. Now imagine if y'all start doing that right now. I'll wait. Where would them kids be, 5, 10, 15, 18 years from now, 20 years from now, when they get ready to graduate, whatever, going to college? Where would those kids be now? Right? Or then I should say, right? So yeah, maybe we need to start really, looking into things in a way where, it'll hold us accountable for the ideal that there are a lot of things that we might have wanted if we had that chance as younger people, that we need to start implementing for our younger generation. Because again, from that energy alone, you're not dealing with a gamble, because you got to be willing to put that money away the same way you'll put in a savings account that collects dust and let it work, right? You will have to put that money away and just let it work. Now that's discipline, right? That's discipline on a whole new different level. Some people are not built like that quite yet, and maybe they need to go through flushing out a lot of their their inconsistencies, and before they can kind of get to that place. But nonetheless, you stay on that path, right? Don't give up on yourself, right? Don't give up on being in a position where you can control and own assets that work for you, as opposed to you having to work for it. All right. So that's what this is all about. So over Sunday, you hit the nail on the head. You're 100% right and exact, bro. We got to get to a place where we start realizing that, if you're looking for the quick buck, if you're not ready to be able to even handle that kind of level of the marketplace as a day trader, don't jump out that window. Right? You don't want to be like the guy up in my little avatar picture up in the right-hand corner, right? That's what day traders that come in to understand how this market works. They out there dance around, crip walking, they jump out there in the real market, and they get what? They get swiped up. They get swiped up out there, right? It's real out here, right? It's definitely real out here. So we want to make sure we bring and pay homage to that, and bring truth to power to the forefront here, because we are definitely with the education over here, right? We're about that life when it comes to the education of understanding the markets, right? And that separates a lot of people from, thinking that you can just come get a pump signal and just, I'm good. Just give me a pump signal, give me a stock, give me a ticker, bro, and let me just go let me go trade it, right? You will not get that on this channel here, right? We're not even about that life, right? We're about really trying to curate money, right? We want base hits over home runs, right? If the home run happen to come, so be it. But, we're definitely all about the base hits, right? We want to be consistent and figuring out how to way to trap money, right? That comes from being, again, a really good curator of information, data, and the way you interpret it. When you understand that, then you're in a position where you can maneuver in this market, because there's so many things that people have yet to even experience. A lot of those traders are getting a crash course on it right now. A lot of those guys came into the market because of COVID, who didn't understand the historical nature of what markets did over time, how they move through ebb and flow cycles, boom and bust cycles, right? Peak to trough trades, whatever. Those guys getting a hard dose of reality right now, because, man, they were buying at the top of a lot of these stocks. Like, people were buying GameStop at what, $400 a share. They were buying AMC at $70 a share. Let that marinate for a moment. They were buying Netflix at $600, and then $500, and then $400, and then $300, and then $200. Let that marinate for a moment. Moment of silence for all that what, wasted money. Because they thought the body dip culture had what, legs and roots, down to the what, substrata, and found out them thing was shallow as the Fed's money printer, right? It went as far as the wrong what, money printer. That was it. And now they're getting a hard dose of reality where they didn't understand the nature of what, how dollar cost averaging work, right? How to play, the ideal of what, PE ratios and forward PEs and market cap values based upon competition, interest rates and all things like that. They just overlook all that stuff. Like, bro, we don't need all that. Just give me a ticker. All right, give me a ticker, bro. Throw me a ticker. Throw me a stock. Right now, they about that. Right, they say about that. Right, about that. It was all good just a week ago. Right, so yeah, it's important, guys. You guys realize this stuff, and again, for what it's worth, you guys understand it. Of course, I know I'm dealing with people who are very sharp here. And we're still in a mode of building, right? We're in a mode of learning, right? You never get to a place in this where you know it all. If you do, you're in trouble, right? Warren Buffett is still learning, right? Warren Buffett is still learning. Like, how dare you? Now, he may not buy Bitcoin, right? Shout out to my Bitcoin people out there. He may not buy Bitcoin, him or Charlie Munger, but they could definitely give you some good macro information, historically, and still put you in some good investments still to this day, right? And hey, for what it's worth, again, as they say, game recognized game, right? Game recognized game. So, it's to each his own, right? There's a level out there or a market for anybody in the stock market, right? There's so many different industries, so many different opportunities out there. Of course, in my mind is just make sure it's making money, right? If you're the only one like it and no one wants to buy it, then that's a bad investment. Unless you really see something in the future, see into the future and see that this stock is going to take off well beyond everybody else. Yeah, you can't be the only one that like it, right? You need other people to be comfortable in wanting to invest in it as well. Right, speaking to the investors out there right now at this point, and that's important, right? That's important. So just make sure you guys understand that too. Right. So again, so shout out to Jerome Powell again. He's the star today. Again, right? We're talking about him carrying that casket, right? Him and Janet Yellen and and Putin and Biden, right? Everybody, right? Shout out to them right now, right? Shout out to just this idea of what this looks like going forward in 2022. Like, these are the key major players of 2022 right here on your screen, folks, ladies and gentlemen. You see, right, the culprits here. These are the culprits, right? Now it's interesting because the guy in the very back, all the problems that that happened in the front of the casket been blamed on him. Right? Everything that happened in the front of the casket been blamed on the guy in the very, very back there, right? But totally, the people, the first three people you see caused all this mess more than anything, right? It's interesting, right? And going forward, we're going to be able to kind of really track what this is going to look like on the back end of the year when it becomes apparent that this was way more bigger than what people thought it was, right? They just had really got ahead of themselves. They got greedy. They thought they could just keep pumping these stimulus packages through the system, not necessarily the ones that went to the people, but these mega infrastructure bills and mega build back this and build back that and all this stuff at a point where the market was just not ready for it. It was just too soon. It was too soon. And see, that's the part where you would think these people were smart enough to realize that, but they were not. And so they're in trouble, right? They are in trouble today, right? So good luck, as one would say. Good luck, right? Good luck, right? If you just put all your chips or you bet on the administration the way that you did, I'm sorry, but you might want to hit them up and say, you might need a refund, right? You might need a refund. All right. So as you see right now, we got Tesla still trying to battle to overtake that 700 as well. Been watching Tesla, of course, given the fact that they had deliveries over the weekend. Pretty sure some of you guys already saw the news with that because we were posting on that. They came in around about 254,000 cars delivered. 258 were produced. Of course, they needed something around about 250. That would be somewhat like the baseline that they were a lot of Wall Streeters were looking for, even though some had like 260, some even had as much as 280,000 cars But for me, I think that was just notable enough, given the fact that their factories in Shanghai were shut down because of the COVID stuff. They got that little pardon, right? They got that late pardon by Wall Street to say, you know what, we'll give you the benefit of the doubt, right? Them getting the benefit of the doubt really, was able to keep the stock from really going any lower than filling that gap. Now, interesting enough, because I said, myself, I said, you know what, I would like to buy Tesla ahead of those delivery numbers, but the only thing that caused me reservation was the fact that we still had not closed that 650 gap. And weirdly so, we got a chance to fill that gap literally the other day. And you know what? I was busy and I missed my buy opportunity. Now, weirdly so, I should already had that limit order sitting there, right? Because I was going to buy it through the options, right? So you got to make sure your options price value, what that looks like, would be kind of somewhere in that area if you put it on from a limit perspective. And I timed it so wrong, but I missed the opportunity to buy Tesla at 650 when we closed that gap. And as you can see here, we came all the way down and hit like what, 649, 648 and change, right? We closed this gap, right? Let's go to the daily chart here, right? See this gap right here? We finally closed that gap. That was a major gap, at least in the short-term aspect of Tesla that people wanted to see get closed. Now, it's still early, right? Some would say, yeah, bro, but it's still early. You may not was, able to catch that gap, at least get, somewhat down there in that area. But yeah, it's anything I think at $700 or better, it's still good. Well, I say, well, you know what? They still got earnings coming up. They got a lot of things still in the pipeline that we got to deal with in terms of these rate hikes. I'm thinking about it from a trade perspective. I want 650 back up towards 700 plus, right? So yeah, at least towards 750, right? I'm playing back, up this triangle, so to speak, right? And so we've double bottom here, and now we kind of somewhat bouncing here in between purgatory, right? At around 700, potentially, hopefully that we can get towards 750. There are a lot of people starting to buy a lot of calls for 750 strike price. Yeah, but I don't want to be caught up in the middle here, right? I just missed my window. But hey, we'll see, right? But shout out to people who was able to catch that Tesla trade, because I literally said, hey, that 750 bottom, look, that gap fill, that may be a great area to be, thinking about buying, right? I just had my limit order wrong. I was like, golly, boy, that one there just messed me up, because we just rallied, right? The back end of that other day, where the market just bounced off of 648, especially in Tesla, ran all the way up towards like 690 something. I was just like, oh, like all that money, he wasn't ready, right? Yeah, I just had to eat that one, but it happens, right? It happens. All right. So outside of that, guys, you guys looking at anything in the back chat, man? Y'all have any stocks that y'all might be wanting to trade? Any stocks that y'all looking at that you want to talk about? Of course, y'all know this is an open forum. You're definitely welcome to share it. Also, if you want to come on the panel, guys, if you have a little time, I have a little time here, about 20, 30 minutes before I get off here. Got a lot of errands to still take care here. If you want to come on the panel, the link is out there as well. Matter of fact, let me post it again. All right, some of you guys are probably busy. I get it. It is way back Wednesday, right? They're trying to get it in. But if you do want to come onto the panel, the link there is in the back chat. We appreciate you. We appreciate your view. We appreciate your, what you bring to this channel, this community, and what it's all about. What about you, Obasana? You have any stocks you might be looking at today? I know you posted that ZOM the other day. It actually rallied like I thought too a little bit. It got up towards 25 cents and change. I'm pretty sure you saw it.
Yeah, my goal on that is actually to get 10,000 of them. So I started off with just 100, and so I'm small trading it like every few days or whatever, or every so often. And my goal is to build up about 10,000 by next year. It's set to be estimated at over $1 by the end of 2023, but you know how that go. I ended up following it from Kathy Woods. I was checking out like some of the stuff that she started investing in after they started going down on the long term. So it was just something that was cheap, and if it was big time investments going on in it, plus the market cap is kind of high for it to be that cheap, I just trying it out.
No, you're 100% right in that again. And we were looking at yesterday, guys, when we talked about this stock here. It was rough around about 22 cents and change. I was like, it's above that 20-day moving average, trying to get, catching a little bullish momentum here, at the back end of this, you know, little pullback of late, you kind of establish a new bottom. You know, as of now, that is your what you call your demand zone, if you will, until something changes at around that even number of 20 cents. And they fought hard. You got a nice bullish engulfing candle here that really catapulted the stock to get it back above 20 moving average, and it literally closed right above it. Right, so somebody want this thing to close above that 20-day moving average, right? Which denotes what? Still a bullish sentiment. Second to that would be what? And this is on the hourly chart, mind you. Second to that would be what? Being able to take out that 200-day moving average, which is the yellow line here. And they did that, right? They did that, right? Definitely did that, right? And now they're up here above the 200 moving average here. And so this stock, is trying to, again, establish a new purse point right now. You're going to run into some resistance here clearly around this 25.7, near 26, right? Which to be noted because we got some chatter area there of people who might be back holding way back over here, right? That may just want to get out the stock after they kind of pull back so low, and that's fine, right? That's the whole idea when you flush people out the market based upon, their, bad timing, if you will. When you take those guys out, basically buy a lot of their shares that they dumping, and if the stock can hold up, then yeah, you can may go test some of these previous areas of interest back over here, right? These stocks back, back around this area, right around this area here, right? So that'll be interesting, just kind of utilizing this stock, this stock and this chart as a way to see exactly where the areas of interest may be going forward. If you can get above 26 cents, then yeah, up towards 28, may not be such a hard push. And like he said, it's kind of given the extent where the stock came from. Yeah, it's some meat on this bone, right? That making come into fruition, right? And you see, we got some little signs up here. We put some stuff in this fan, talking about the lower highs of it, right? But getting back up towards 40 cents, 30 cents, all that area, yeah, potentially, potential might be some action in there. But like you said, you got to deal with the idea that it's cheap. You got to deal with the fact that, given the fact that the market kind of punished it at a point where, a lot of other stocks was coming down to, you got some notable people talking about it, like a Cathy Woods, whomever. It may just bode well for the stock at some point to try to get it back up towards that dollar range, right? Right, which it fell from its grace, right? It fell from grace going back February 2021, and then again on March 21. And so, yeah.
Oh, another thing, and not being on no cheap guy stuff, but that stock actually doesn't hit no lower than I think the lowest it got was like 16 cents or something like that, but it averages out to where it doesn't get no lower than about 19 or 20. And so with that being said, and that's as the market's bottoming right now. So with that being said, it's just like if I get the 10,000, this is why my goal was on that. Every time it goes up a penny, it's $100. So it can keep evening out every day like this all day. But if I got 10,000, I'm making an easy extra. You get what I'm saying?
Oh, definitely.
Yeah.
Man,
So.
I don't, of course, you didn't know me way back in the day, but man, I used to tear these little penny stocks up, right? Man, we had one. My brother Rich Boy, he come from my old little cruise a little bit back in the days on Sal Discord and all the other crews. And man, we used to have our little moment trying to find these little stocks like that. And I had one that was a massive little, it was just all over the place. But this company called DCTH, Dell Cal Therapeutics or something like that, right? They deal with cancer, right? Liver, right? Liver to cancer. And they had really good technology, right? But the management, the C-suite sucked. Right, the C-suite sucked for that company. Like they had all this great technology in terms of dealing with cancer, but really bad management, right? And that's the worst thing that you have to deal with as you invest in a company that has a really good product or service or technology or science, and you have bad management at the forefront of that, they can mess up a really good momentum, right? And we dealt with that, with that company DCTH. And I was like, man, this just but anyway, I was able to catch it on a moment when it kind of really pulled back on a hard, it kind of went through its flux and got beat up, and the stock got down low like 4 cents, right? I was loading the boat around 4 cents up to 7 cents, and I had kind of put a projection out that the stock was going back up towards like 20, 30 cents, just like you were doing. You saying if I just buy a lot of shares, at some point, every penny it goes up, you'll make a certain amount. I cleaned the clock on that stock, right? Ended up hitting my goal, even though I wanted to go higher, beyond what I had chose, but it just wasn't in the cards, man. The management was just sucking, right? They just messed up a really good stock. So that happens, but for the most part, as you see, even with this company here, right? Again, anything above this 200-day moving average going back on what? December the 15th, 2020, that's your what? Your hard line, right? Your hard stop, in my opinion. If you fall below that area there, because guess what? If you look at that area there, there's a flat top breakout at that point. See right here? That's a flat top breakout dang there, right? You have a lot of accumulation, consolidation there, and it broke out, right? Now, coming back to this place here, if you lose that line, I mean, if those guys, end up selling, if they still in it, who knows? But if they sell, right, who are, old school holders in this, that can be problematic for the stock, right? You can easily flush down towards 14, from 14 back down towards maybe 11, then from there, 10, 9, maybe lower, right? But as, you were kind of denoting to over Sunday that, there are, a couple big name people trying to look at this stock as well, the technology that they have or science that they have, potentially may be worthy enough for them to, take some little small position on. And y'all can check that stuff by going to maybe, their financial website to kind of see, who are the insiders that may be buying it. If they're in the institutional buyers, that bodes well for a cheap stock, because you need big money to, like your vision, right? Your goals, right? If that's the case, then yeah, you may have something on your hand to play with here. If you just get, like I say, 30 cents, 40 cents, 50 cents, that's a nice bag. Right, that's a nice bag, right? So Equilibrium definitely puts this thing around by 50 cents here, giving this kind of same way here, flat top breakdown, right? It's supposed to flat top breakout almost. It just kind of stayed sideways in a tight range, and then it broke down, right? So to get back up there would be like, really, really good place in this stock, right? So hopefully it does for you, all right? I hope it, it goes well beyond what you really want, and from there we'll try to, see what the future holds for companies like Zomatic and many other little small cap stocks. Because the IWM, which is the Russell that it's being tracked by, right? You really want to keep your eye on those, because I think small cap will be the first thing to tell you that when we kind of make that hard turn, right? With all the recession fears, inflation fears, all that stuff. When the small cap stocks start to really, really rally, right? Meaning the IWM as a whole, of course, then you could say, maybe, you can start looking at tech a little bit more different and, some of the other stocks, right? But that's just from where I sit, right? In my opinion, right? Yeah, so shout out to that, man. Shout out to that. You say it's going to pop and drop like last time, brother Kevin. What's going on, brother? Everything. Shout out to you as well, right? Happy to have you in the building, right? All right, got everybody, slide through a little bit. Let me get Sonny back in here. He kind of went out a little bit. You there, Sonny?
Yeah, I'm here.
Wait, okay. I know you probably got dealing with signals and all that, signal areas, but yeah, so that's my take on it too. So you already got a good plan. I'm pretty sure you got it. You're going to manage it properly, and then hope everything work out too.
Hey, I finally did a trade where I wasn't waiting too long, boy. You had to get in and out today, boy.
What you got on the blotter, man? What you did today, Ober?
I did my end up in on the NVIDIA.
Oh, you hit your NVIDIA. Let's go look at the NVIDIA.
I got in, and soon as the little meeting, I didn't even listen to it. I was just watching the chart. I said,
Right.
find me a little one contract and see what it do. And I seen it hit up there one time. I said, I'm gonna buy it on the pullback.
Nice.
Okay.
Oh man, look at it right here. And I looked this stock with somebody maybe. I got you. I want to say maybe a few days ago, whatever. Somebody asked me about the video over the weekend, the 3-day. But yeah, like I say, at the bottom of the linear regression band here on the hourly chart, clearly you can see what we said, a little small little bottom effect there. And it just kind of riding the wave of the Qs, right? The SPY and all that. And you had a 20-day breach as well. That's very important because that's a buy signal, right? Anytime you cross over a major moving average after you kind of lower below it, as you see it kind of tighten it down at around the 20 moving average, kind of stop the bleed. The RSI hit over oversold. You was at a 30 RSI. A recipe for a really good swing trade, right? If nothing else, right? A nice little swing trade. Really, really set the environment for a little risk on in that stock. And if you caught it, of course, like what you're speaking to, I know you're gonna speak more in depth on it, bro. I know you were happy for that one.
I got in and out of that thing, man. That thing, I seen it. I said, if it pulled back, they play these little games at first.
Yeah.
You think it's gonna go down, and I had my little level set. I said, man, if it hold 149, 150, I'm gonna get in and I'm gonna get out at 152. I end up holding the 152.50 on my little contract. So I got me a little 25% real quick, like, and I was out of there. I'm good. I'm good. Just getting back into the feel of understanding how fast this thing, because if you hold it, that time can get you. I'm kind of realizing, but
well, you know, again, these are weekly, so you're not like you're fighting against like the SPY would be on day to day. So yeah, but nonetheless, like I said, you know, you got to be cognizant of understanding how to utilize your moving averages and the price action and momentum values to your favor too. Why? Because yeah, we always say a bird in hand beat one in the bush, but I'm always gonna say trust your what? Trust your indicators, right? Trust your levels, because if there's more meat on that bone and you're not necessarily what really hard pressed, you know, and thinking about being fleshed out or something, yeah, you know, get paid, right? Because right now, if you look at this start here on the video on the hourly chart, this thing got bullish drift all over, right? That first hour, that was just what? To flush out some of this what? Euphoria from the previous day. And it still didn't really break down no lower than, you know, a key point of what? Support at around this 148 area, because it just went back to an old point of resistance in the past, right? Right here, right? With
well,
this
I had my levels. I was playing off the last hour of yesterday, and it really didn't never drop under the low of last hour yesterday. It kind of like held in that range and stuff. I wish I should have.
Well, it went a little bit lower, because if you're looking at here on my chart here, see right here, it went a little bit lower, right? Because keep in mind, this is your low of today, right? We got down as much as like 147.93, right? Yesterday we had that low of around about 148, or about a dollar. But if you, again, even in that perspective, right? Because you say to yourself, if we're playing a game of what, you know, trend value, right? Even if we use the wicks, right? We use the wicks over the body of the candle. You know, you still had a good little range here. And we're saying, you know, we're going to play the game of what, you know, lower highs, right? Or higher low value. Your trending was still intact. Why?
No,
Because
I was playing the last hour range. That was my level from yesterday, the last hour.
Right, that's what I'm saying. This candle right here. You can see it. Can you see my chart here?
Let me see.
This guy right here. That's what I was pointing to. This guy right here.
Yeah,
I just draw a little line.
The last hour was like 147.
Yeah,
175, something like that.
It was like you had a low of 148.77 and the high of 149.71. That was the last hour of yesterday, right? For NVIDIA.
Did I write it wrong?
Now, you might have looked at the one that's previous before, because this one here is at around somewhat close to that 147 area, but nonetheless, it was still in the uptrend. Because look right here, right? You got that bullish arc, right? We talked about the little arc patterns as well. How kind of, how to watch that kind of, drifting up to the upside, kind of stabilizes, build, find a couple new buyers. And of course, in this case, it spilled into today, and then it ripped and went higher today, right? So it had that continuation phase, because, if you think about it from this angle, this was a really good bottom trade, because look at the you bottom out on the RSI and the linear regression band. You hit that support and it held, and after that you had a big bullish engulfing candle here, which denoted the bulls are back in town. If it's just for a day, right? The bulls were definitely back in town here, and this was just a great little money trade here to play into such a strong stock like an NVIDIA, because we know the semiconductors were getting hit across the head. The one stock that made me see this as a potential good trade today yesterday as well, even though I didn't trade it, was what? MU broke out yesterday, right? Micron, right? We was watching Micron. Micron broke out, right? So AMD cut a little bit, even though AMD all over the place, right? I really like AMD too, right? So I told everybody, anytime AMD gets around about $70 a share, me personally, I don't have a problem with nibbling into AMD, right? Because I do feel like it's going to be one of the major, chip, houses, in the future, possibly even overtaking Intel. Who knows? I think they have the potential to do it, or the potential to do it. So NVIDIA, of course, being a top dog in a lot of ways, if you watching this, because I know you like NVIDIA too, Overrich, man, like you should have caught this bottom, man. You'd have caught this bottom here Tuesday when we hit the bottom of the integration band, when the NU was running and the SOX was up, like the semiconductor Philly semiconductor ETF. Man, this would have been a great little trade, man.
I don't never give myself enough time, man. I should just try to. I tried to get in it last week and I end up losing a few dollars. So I need to give myself, like, in a stock like that, I should have known. I said, man, I need to give myself like 2 weeks to swing it when it got to that 145. Even though it went against me, it looked like it's want to go higher now. But
well, it's definitely going high. It was still bullish. That's why I said, man, if you just saw if you saw it cross over that 50-day, 20-day moving average here, that should have been your signal there. Because look, and you back tested it, of course, on the hourly chart here. That's all, that would have been enough for me, right? Just me personally, of course. But yeah, I would like, man, look, until they shake me out or they come back towards it, this flat line here, because that's basically what they're doing. Because look at the 20 moving average here. It's starting to flatten out here. You see exactly what the 20 moving average is doing here. It's doing the work that you're supposed to see. And now it's turning up, curling up to the upside, right? Like you got, man, that, bro, yeah, you'd have went half on the baby with that one. You'd have been half on the baby.
Sometimes you want to hold, man. Right now, this
I get it. Now you're right. You did the right thing because I'm a big proponent of what? Always be closing, right? Y'all know we talked about that a lot, right? This is the market where you want to always be closing.
That was in my mind the whole day. I said, man, if I make any trade, I'm just gonna get in and get out and just see.
But I gotta say, but you still gotta trust your moving averages. You still gotta trust the bullish drift. You gotta trust the price action because that also denotes that you came in with a strategy, a plan. All right. Now you may have gotten what you feel like you wanted from it. Who knows, right? Of course, that's within what you probably saw as opportunity. But I will say this, just given the fact that when we talk about measuring trend value, right? What do those succession values of candles look like? What is the extent of the price action, right? What did we come from, right? Previously, right? What was the previous day? And you got an RSI that literally bottomed out, for about 2 days, right? Or at least a day and a half, if you want, a full day, if you will. It was just at the bottom the entire day, just bottoming out. And so, a stock like NVIDIA, man, come on, this like a breadwinner here, right? NVIDIA is a breadwinner.
Real quick.
Yeah. So it's process, bro. I get it. Again, you learn, but I will say this, just stick to the ideal of being very, being vigilant in terms of how you respect the value of what, your indicators and, the price action, in tandem to that when they're working in unison, as you see here, look at her. See right here. What I mean. You see that round the bottom turns value of volume like this here. And you peak value, then you kind of the same thing. See, this is just a complete repeat of yesterday. Look at the volume here. Look at all that green right there. Now, of course, it's hindsight. Today, you got market moving real time now, but the way it closed even yesterday showed you that it had what? Bullish energy, right? A bullish sentiment. Now, I opened up red, of course, everything was all over the place, right? You had a nice little run off the lows yesterday. It just pulling back a little bit, but it didn't pull back enough substantial to kind of flush people out. It didn't take out this candle. It didn't take out these guys right here, right? This guy right here, these people right here, they were safe, right? So anything at that point, I would have set me a stop at around about this what is the line at right here? About 147.50.
That's right? Listen, that's where I had my levels at. That's what I say, man. Listen, man, you read my mind. I say, man, listen, I shouldn't sell because I ought to make them stop me out if they keep going. But I'm like, man, you was in my mind all day because what you were speaking yesterday was some factual stuff. I'm like, even though right now it's running, I don't feel bad.
No, you shouldn't. You shouldn't. Yeah, there you go. There you go. Bird in hand beat one in the bush. Because
I know what a video do. Like tomorrow, like now, it might finish strong. And then in the morning, you wake up, it's down $4. It's like, what the,
Right. This is the ABC market. You're 100% right, Over. And that's why I say, even though, but again, from an intraday perspective, now you may not want to swing it, but you dog shook and what? You can show what? Take every scale, every bone off that fish back, right? Right? Throughout the day, if nothing else, right? Because that's what we're trying to also be, in a position where we can really rate the opportunity, right? Through the probability of what the market is giving you. And some of these stocks that kind of moving and that's hobbled by, their own individual, issues in-house. But if you get that broader market sentiment, bullish drift, and the stocks is breaking out, like the semiconductor ETFs and all this stuff, and the Qs are running too. That's all but a signal to let you know what, okay, this is going to be a good little moment. Now, even though we kind of broke out early, pull back, and then we began to kind of sputter before we got into some of this economic data that was waiting for today, right? Up until the Fed minutes, the stock was still trying to show you bullish energy, right? And all this is an old school continuation. You hit oversold literally on the hourly chart. And now you're fighting back in some of that inside some of this 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 oversold territory, getting back over a major moving average. And the next levels begin to be very easy to read, because you got areas of interest up towards 155, and then you got a nice little gap course up towards 157, right? So most people are trying to potentially probably play into that. Now, will they be successful? That's to be debated, right? Debated. But as of now, this bottom low fishing moment here from 140, now you up to 150. That's $12, right? $12, right? And 8 hours worth of trading. $12 and 8 hours worth of trading, meaning 4 hours, whatever, right? Inside of the value of the drift value in this case. And when we kind of broke out, well, I should say more than that, like 12 plus hours, but nonetheless, you had 2 days worth of signaling to kind of make you feel comfortable of the breakout, right? Given the fact that it did not necessarily roll over, after it closed yesterday, it closed right up near the 20-day moving average, right? So it fought to get up there. The next day it opened up, flushed out some of those old people who took profit. It held really well above 148, right? Again, I said I would have set mine around about 147.50. That's just me, right? But outside of that, man, this stock looks very strong, right? Looks very strong, right? But yeah, again, bird in hand beat one in the bush. You ain't did nothing wrong, right? Right? As they say, I ain't never scared. I ain't never scared. Right, take that bag. Hindsight's 2020, but a bird in hand again beat one in the bush, and you did that, bro. You got the bag, and that's all that matters, right? Because it's a game of base hits, not home runs. Get comfortable getting those base hits. It's going to build your confidence level. You'll get more better at accepting the value, what your moving average is showing you, what the trend value is showing you here, as you can see here now, and you'll trade it even a little bit more methodical as you go forward. Right.
Yeah,
so
it got turned all the way up now.
Yeah. So the market is ripping right now. Again, we were talking about that earlier about, the use case of the market. Remember I told you yesterday that 384? Yeah, 384.60. I'm just saying, y'all give my little flowers in advance, right? Give my flowers in advance. There we go. Right. We completed that move, right? And this, matter of fact, let me go to the daily first, because we started it on the daily. I want to show you what it looks like on the daily chart here, and then we'll move to the hourly. But just with that bullish sentiment drift that I already kind of mapped out and seen kind of building and brewing. Y'all know how Wall Street is, right? They're trying to get them a win wherever they can. They're trying to close out some of that Fourth of July holiday drift, right? I'm just cutting up. No, but seriously, above 384, no bueno, right? Not even hesitating. Excuse me, at this point. That same round at bottom, right? We drew this line, of course, in advance. You guys already know that. We said this is where we're going, right? We drew this line in advance, and here we are today. We basically completed the move, right? Yeah, small little tiny wick right there. We got up as high as 385.42 as of now, right? As of right now, we got a 385.42. So we not only took out that 384 and the 384.62, but we went on and made an additional 70-80 cents drift on top of that, right? So again, really, really good price action here, following the round the bottom value here, following the guidelines and grid lines, the purchase points, if you will, right? Points of control, and utilizing momentum, bullish drift to come in and keep the market somewhat stabilized, given the fact that we bottom out at 362, we get it. If they can get anything that they feel like is necessary to turn the market energy back towards somewhat bullish, meaning less rate hikes, less other headwinds that are out there that we haven't priced in yet, the markets will still say, we still we're still risk on best we can to try to at least come back and take out some of our old areas of interest, right? 392, that's going to be the first area. Well, not the very, very first area, but we talked about 384 today, but back towards this 387, and then from there maybe up towards 390, 392. Then from there, of course, this gap fill over here, right? Everybody got their eyes on the potential gap fill because they feel like if they can get the market back up that high, man, establishing a new support above 400 will be like the biggest thing ever for them, right? All right, so they will be trying to do what they can. Will they be successful? Who knows? But we're going to trade the stop and go aspects of the market best we can, because I just closed out my swing puts. I literally just closed out my swing puts, right? So that's a nice bag, right? I bought those puts yesterday around about 378-ish, 377 and 378-ish. All right. And then I bought some more today. I bought some that I swung yesterday, and I bought some today for intraday, right? When we pull back this morning, well, y'all already know the rest at this point, right? Nice little bag, right? Nice bag, right? So that's a nice little, you know, kind of closing of that same energy we was talking about, right? Now I have one left, right? I have one left. I'm gonna actually swing it that I have I bought for Friday's expiration, right? And so we'll see what comes from that. Depends on how the market closes out this afternoon. But yeah, man, this bullish sentiment is just, you know, you got to be able to kind of what, you know, pick your poison, as one would say. If the sentiment gives you bullishness, hey, you stay in the game until they tell you that, you know, take your ball and go home, right? And so market's still trying to pump here in the back end of the last 20 minutes of the market here, dang near. And we got, you know, imbalances coming out in the next roughly around what 350, right? So we'll see what that does if people still, you know, have a risk on kind of appetite going into tomorrow. Now that we've got the ISM, you know, data out the way, we got PMI data out the way, we got the jokes numbers out the way, and we got the Fed minutes somewhat out the way. So that still, you know, is sitting well with Wall Street at this point. You know, maybe, you know, they may get a chance to push this thing back up towards that 387, 390-ish, 392 area. If things, you know, kind of follow through in terms of this round the bottom pattern that you see in here. If they get their way, then 9 times out of 10, this thing should kind of take out the 20-day moving average at this height aspect of it, not the flat line aspect of it that we broke out of today, but take it up towards this line here around 387. You close above that, then yeah, like the tops of these candles here would not be that far-fetched, right? But again, you need the data to work in your favor. You need the energy to stay, you know, risk on. Everything needs to be kind of what a fine-tuned machine, right? Or the best recipe put together. But as of now, y'all winning, right? You eating, you're winning, you're trading the market, what you see, and you're not stressing about it, because today was definitely a stressless market, even though it kind of sputtered in the very beginning. But when it turned, right? We got the data out the way. Wall Street accepted that. We didn't go really, you know, too further below 380, which I had in this my line in the sand for the SPY. I said 380 gonna be the support or the pseudo support, right? So we know you can account for a little spillage, right? So even if you come down around about 379, 60 or 379, you know, 80, that doesn't really constitute that support was just completely broken. That means that y'all know Wall Street doesn't necessarily do whole numbers and half dollars to the T. We just said that's gonna be the area of inches of support to look for, right? The pseudo support. And we hit that area and we bounced. And now we are up here at what 385.60 and still ripping, right? It's since been ripping. And y'all got to rub a little salt in the wounds of Ober Rich that's on the counter right now. Well, them Nvidia calls be ripping right now, but them Nvidia calls be wealthy.
Yeah, they'll be up.
They'll be up nicely right now.
Yeah,
we up near that 153.
I sold at let me see what I sold at. I forgot.
Yeah, I think we got we have 153.05 still, so it's percolating a little bit on that stock. So, but yeah, man, bird in hand again. Bird in hand beat one the bush, man. That's all that matters, right? And so I'm excited to see, you know, the family making a little bread, making some money, right? Doing what we do, right? What's going on over Rich, right? Rich B in the building. What's going on, family? Peace, our profit to you, right? What's going on? What's going on, family? Nicio, right? We got Nicio in the building, man. Shout out to you as well, right?
So far.
Yeah, happy to have the fam in the building, right? Shout out to you guys as well, right? Shout out to you all today on this way back Wednesday. Shout out to Over Chris. You said, oh, yep, AGRX as well. You're right. AGRX, Dr. Foods. Yeah, we got to talk about that. We had been a minute since we talked about Dr. Foods. I know I'm gonna have to come back on and do something really good on Dr. Foods, because right now it's going through that whole, it broke out. Now going back to its crackhead era, and now they're gonna have to really begin to produce, right? Within that whole merger thing with, you know, White Knight and Next Meats and all this stuff like that, because that whole industry has just been beat up. That's what's sad, because if you come out in, you know, as a unicorn company or a new company, and the energy of the market is not favorable, right? At a time you actually got something that the market probably can use, but they don't necessarily want to spend money for at this point, that could be detrimental. And they say timing is everything. Man, tell me about it, right? Tell me about it. So Dr. Foods is one of those stocks that we would call, you know, I called it when it was like 0004, right? And it went all the way up to like, what we got, like, no, 4 pennies. We went all the way to like 4 cents. right? From 0007, right? 0004, 0007, where I was in. Some of the other family got in at 004, right? So when I began to bring it to the family, and a lot of those guys took it from 004 up to like over 2 pennies, right? So that's a nice little bag, right? And since then, of course, Beyond Meat kind of then pull back, which is kind of the benchmark stock you want to look at for us Dr. Foods, Next Meats, whatever, right? Faux meats, faux, stuff like that. And the stock has pulled back since then. So yeah, I need to kind of go back and revisit it. Right. But definitely we're gonna get on that. What's over everything you said XLEA XELA, excuse me, also load up. All right, one to look at as well. We'll take a look at XLE, XELA, excuse me. All right. Let's see what that looks like as well. So yeah, this is a little, nice little actually this one here definitely in the downtrend as of now it is, of course, but just kind of waiting for the bleeding to stop possibly on this because the RSI definitely sitting at 28. In that perspective, yeah, this stock may have a moment where it may stop the selling and then the buyers may come in. So let's see the last time it's sitting at around this price here. All right, actually never, right? So this is the first time it's actually having price discovery a little bit to the downside. And so whatever that's causing it to bleed at this point, whether they done, letting it bleed or not, that's to be determined, right? So I definitely have to do the backstory on this one here. But yeah, the stock was trending up here around $30 a share. And just been kind of going down, getting beaten down, getting beat down, getting beat down, getting beat down. As y'all can see on the chart here, RSI just been, going through the ringer here, going under 30 several times, as you can see here, especially on the daily chart, getting down towards the 22 and possibly even the teens on the RSI of late. So somebody's definitely still selling. But at some point, the bleeding has to stop. Now, there's still a story intact with this company, meaning, there's still potential in the company. Then yeah, we would hope that a bounce potentially should come at or around a certain point where all the sellers have somewhat dissipated. Now, this last candle right here says a lot. Look at the size of that volume bar right there, right? This volume bar right here, whereas at least on this particular day, it was over over in this 600 some odd shares, 620 million shares were dumped right on this day right here. So whatever that was all about. At least it was traded, right? Not maybe all of them were just dumped, but that was 620 million shares that were moved, and the majority of that probably was dumped, of course. But what was that? What was that about, right? As you can see here, clearly here, with this candle here, right at above the 20 moving average here, it pierced above it, then failed again, came back under it. That was a massive volume bar there. Man, look at that there. So yeah, you got to keep your eye on this one here. You want to set you some alerts on this one here, everything, and see where that proverbial bottom is, because this is what they call price discovery to the downside. There's no proverbial track record or history that you can measure it up against. So this is all going to be dependent upon the price action, right? So you got to keep your eye on level 2. You got to keep your eye on a lot of that the price action, but the management side of things when they're putting out certain pressures that may cause the market to see this as the company starting to make a turn for the better at this point after this kind of slow bleeding out. As you see all this red here, that's just a constant. When you see stocks like that right there, it's bigger than the value of the shareholder saying, yeah, we're just cheap, right? This is a management issue here. This is clearly management here, right? They're doing something horribly wrong, right? They're doing something horribly wrong. They're maybe not putting out enough press releases. They're not explaining the issue, what they got going on. And people are just selling, right? They're just selling. The stock is all the way down to like 10 cents, right? Dirt cheap. It was at $30, not, long ago. It was at $30 a share. Now it's at 10 cents, right? So yeah, that's problematic, right? That's very problematic, right? So hopefully they get this stuff here ironed out, man. And because that not, as of now, yeah, it does look like a pump and dump, right? It just definitely looks like a pump and dump. So we'll see. All right, we shall see. All right. So yeah, what's going on, Ober Brandon? We see you in the building. Our resident hospice in the building. Shout out to Ober Brandon in the house. Man, how's your day, fam?
Oh, I'm good. How's everybody else's day? Can y'all hear me?
Yeah, we can hear you, man. Watching these fireworks, man. These people got them little Fed minutes, boy. They in their little feelings in a good way. They buy, they buying like they didn't hit the lottery, bro.
Right. I got a good scratch off.
Yeah, they got that scratch off. Right. And let me go over to the charts real quick. But yeah, what you see going on today? Had a chance to see anything, checking anything out today?
No, nothing really. I've been focusing more of an aspect of getting my account set up.
Right.
Um,
Gotcha.
and then I've been looking at long-term plays. I'm still doing that thing where I get on Yahoo Finance and I look at the biggest losers for the day and the biggest winners for the day. And
Nice.
it somewhat goes back to that last chart that you just posted. It was an
Yeah.
XLYA, I think it
Uh,
was.
yeah. XELA. XELA. Mm-hmm.
Yeah, yeah,
Baylor
w-
Technology.
yeah. That's done. I hate
Yeah.
to
That.
say whoever put that out there. Yeah, that's done because
They
like if
got
you go to
cooked,
year to
man.
date, yeah, that's a wrap. I
It's
mean,
definitely.
they really got to fight.
Yeah, I say this is a management story here. The management didn't do a good job in detailing, the extent of what's going on with the company thoroughly enough where
Right.
you're going to have investors, or if you even have institutional investors in the stock. But if it's just all retail type traders at this point, which probably is the case because retail, big money probably been left the party, right?
Yeah.
Right.
Oh yeah.
If it was
They've
at
been gone.
30 and now it's at 10 cents, right? If any big money hang around, they just came in, right?
Mm.
And they might be trying to trade it, maybe from a quarterly perspective, right? Just to kind of fall within the 13D filing, compliance. They may just say, well, I bought it here just to see, they might, well, whatever, right? But
Right.
yeah, this ain't true, man. This is tragic. Anything got up before, like it was at 38. It went up 38 one day too. Man,
And just think if you had options trying to get out of this and options that aspect, it'll be hard because
yeah,
you
I know
you
that market probably just, ugh,
yeah,
you'd be
that
stuck.
there's no market for options, honestly. If it's at what 30 cents now, you get in like at what $1.
You're at
I mean
10
like you could
cents.
try. Yeah.
Yeah.
It's a wrap.
Yeah, I mean, we
But no,
seen certain ones come back, but like I said, it takes a whole lot to come back once you went, at that point.
Boy, there's some big red balls coming up on there, man.
Where that open?
What's going on at the end of the day? I thought they was buying. What's going on?
What you about the SPY?
The QQQs.
Oh, the Qs. Well, probably the same thing with SPY. Yeah, I'm saying looking at this one here real quick. Let's see what they're looking like. What they looking like? Let me see what he at. Oh, they still look good, man. The SPY's up to 384.30, man. It's only about $1 off the.
The Qs got a big ass ball come up.
Oh, let me look at the Qs real quick, man. Tech might be. Oh, let me get out this monthly chart. I'm over in the monthly chart playing around. On the hourly, it just hit resistance. There you go. You're up against resistance. Now that's enough, of course. If you ran up into that resistance, like I said, and didn't take profit, same what we were talking about here, you ran right into the 200 moving average here. It's going to have some problems there. Of course, it's natural resistance point. You're going to hit it and get slapped down. Essentially, what's happening here, you pierce above it, but then close above it, which is the whole reality of showing strength. You have to close above a major moving average. If that does not happen, that's problematic, right? At least on the short term, right? But if you rolled it up into it, yeah, that's a bag, right? It's a money bag. So now you're just looking at, how much of this pullback here is just people taking profit after hitting a major resistance, right? Clearly, that's the case. The area of interest will be to watch this candle next to it, right? So you will have to take out this entire candle in order for this to really show a lot of weakness, right? After having such a strong bounce over the last day and a half. But if it's inside this candle bar right here, this green candle here, I would say this is this is normal. This is natural order things here, right? It's basically supply demand. It's profit takers from those who are just kind of just getting started, who caught it a little later. And so that's all it is, just a changing of the guards, right? Like somebody changing the shift on the job. Right? Some of the old buyers are getting out, and the new buyers who just bought maybe somewhat inside the move or the pump up, this area, at around the bottom here. Some of those guys right here have to be the new holders until the market kind of pick a direction, at least tomorrow, if they're going to hold it until tomorrow. But as of now, this candle here will be the area of operation that I will look towards. If we don't take this candle right here out going into the close, then it may still signal a little risk on. Because that's it. It happens if you bought anywhere at around, let's say 288.60, 287.70 area right here on the keys, you still got a cushion, right? You still have a cushion on that position, I should say, into at least tomorrow and possibly Friday. But again, it depends on each individual risk profile, right? That's just a blanket value from how I would look at it. Given that I got in, maybe on this round the bottom here, somewhere inside this bullish drift here potentially, right? But again, it gave you a great little spike here where you got about the 200-day moving average here, and I'm all but certain I know people is ringing the register up there, right? It's just a natural resistance, right? Natural resistance area. You come up against a big moving average like a 200, right? So as of now, yeah, just pulling back a little bit. Same thing with the SPY. I see we back down to a 384.20 something at this point, and we getting ready to go into imbalances too. That's why it's also pulling back too, right? So yeah, them imbalances, they come out and they kind of messy. Because like I said, we still up against the data every day. That's why we are still in a part of what? ABC marketplace, right? Always be closing, right? And we're not gonna,
That's what I'm saying. See, now look at the video now, man. Shoot, I'd have been.
Yeah, again, but that's natural. You know how stuff go. It's gonna have its moment where it's gonna, go through that flux. But maximum potential is one thing, of course, and being able to kind of eke out with a win, that's another thing too. But long as you winning, I think that's the whole story here, because when you catch these bounces like this here, at some point, at the fact the overall market is still weak, you can't take solace in thinking that the market gonna bail you out or protect you, right? Because these jokers, man, look, it's brutal out here, right? It's brutal out here in these streets, right? So you got to be cautious of that, and you're 100% right, Oprah Rich, in that regard, man. I sold my SPY put. Like I said, I got that one left, right? I sold my SPY puts above what? 385.30, 385.40 area. I sold my puts. That's my swing puts and my intraday puts up into that area. So you already know, right? Look,
I'm with you, boy. This thing worse than the streets, boy. I tell you, boy. God dang, boy.
It's hard out here. It get hard out here. That's just the energy of the marketplace at this point, because we're dealing with a whole lot of people trying to say, well, the markets is this, is that, is this, is whatever, right? Wall Street trying to make their case, the bears of the market are making their case, and the economic data is what stating a different case, right? No matter how it's being disseminated, we know if we're tracking organic reads, like if we're going to the treasury yields, we're going to the bonds, of course, we're going to the commodity markets, we're checking the dollar. The dollar just been ripping, right? Look at the dollar. Right, the dollar has just been on a tear. I know y'all been watching it too. I couldn't be the only one watching this soap opera here. Man, look at this here. This thing stood up and just walked away. They say it just stood up and then walked away out the casket. That jugger just raised up in the casket and then walked away. This is exactly what the dollar did here. It was just, look at this bullish drift here. It was above 200, of course, going back, back when we kind of lost it a little bit on the 28th of June. We got above it. We trended at around that 20-day moving average a little bit. Lost it, got back above it, kind of snaked it, typical, right? When you're trying to build price action, still a bullish flag above the 200. And then all of a sudden, these two bars right here, these two bars right here. The first thing a person will see that on the chart, on the hour chart, ask that question, is this on the dollar of all assets, the dollar? What caused that? Right? Then it becomes apparent, right? There's this flight to what? To the dollar now, because gold is pulling back. If the dollar ripping like this, gold selling off. But what causes it's a flight to safety, right? People run into what they perceive to be somewhat of a demonstrative asset that can weather a little bit more of these issues that's happening abroad. Because if you look at the latest, two victims that are up against the currency, guillotine is what? The euro and the yen, right? I don't know if y'all been watching this lately, but the euro definitely took a big hard turn to the downside recently, right? And then the Japanese yen, right? They so close to going under from a credit perspective, because they've been printing so much money and they don't have enough production. Y'all know this whole story about Japan, from a historical place. They just always, they've been we're being for hours talking about them, but they are at a point now where Kuroda, which is the Japanese central bank over there, right? He been doing everything in his power, bless his little soul and little heart, right? But he been doing everything he can to try to dig them out of a hole, and just by printing money to try to keep the economy balanced out, what lack of production they typically have, and it's just not working well, right? It's coming to a point now where
this ain't good price action at the end. This ain't good.
Oh yeah, the market pulling back a little bit. I'm seeing it too. I'm talking about this dollar, but yeah, you're right. I see the SPY pulling back a little bit. Again, still bullish, but it's again, people are taking profit. So And balances must have just came out. And balances came out. That's probably what it is too. So
what you mean by imbalances?
Imbalances are basically what orders that a lot of market makers or big book holders will submit or push for the end of the day, and like in one big tranche, and it'll be like a buy order set for like Apple or Tesla or whomever, right? And they'll just put that position on, before the bell to be somewhat in compliance to such a major order, right? Because typically, they wouldn't put that kind of money on in the in the after hour session, right? Because there's regulation that keeps them from doing that because it messes up the tape. So they'll do those kind of purchases on the back end of the day. And that's just a layman way of saying it, but that's basically what's happening. So you'll get that every day around about 350, between 350 355, typically when those imbalances come out. Right. So so definitely look into that too, get a little familiar with the balances, and see exactly what the weight that they carry, because right now a lot of them I'm pretty sure that some of them will sell imbalances. It had to be, and like we talked about, it's probably gonna depends on how the sell imbalance or the balances come out will determine whether or not this bullish drift will at least hold up pretty well.
Whoa!
Right. As of now, the SPY is just it's dancing right at that at the VWAP. As much as it popped and went higher and pulled back, from 385. All it's doing now is just dancing right at the VWAP, which is, you say, man, but that's a hard pullback. Yeah, it is. However, y'all knows what I know. If it can stay above those, but again, some of them major moving averages, if that's the case, then that's still somewhat, it's somewhat of a little, a little bullish, I guess if you want to say it's a little bullish win for people who think the uptrend is still intact. As of now, closing above 381. Go ahead. Okay. Your mic is out, open. We can't hear you. Your mic is out, open, Rich. Yeah, his mic is out. I don't know if he can hear us, but yeah. All right, but yeah, so yeah, anywhere above that VWAP for now, as I gotta say, for now, right? That's a little bullish energy for now. So we'll see if they lose the VWAP and possibly the 20, yeah, then it could be like, okay, bro. Yeah, somebody mic open. Oh, that's Bubba Rich. Okay, gotcha. You got getting it right over there. But yeah, so this is what it's looking like, guys. So yeah, that's an ugly pullback off that 385. Again, you got to always basically up near 386, and then imbalances came out, and guess what? Profit taking. Again, always be closing. Always be closing. Right? Exactly why, of course, need to tell me twice, right? I definitely ring the register on mine, and I'm pretty sure, looking back in hindsight, someone say, yeah, it was a good moment. I took profit. There's just a marketplace that still has a lot of I should say it has a lot of FUD and euphoria mixed together, right? If FUD and euphoria was to make a baby, that would be the stock market at this point, right? Two diametric opposites in a lot of ways. And it's trying to figure out, what this child, may end up, growing up into at some point, given the fact that we got all these different things again weighing on the market, and we just cannot overlook them. But in the grand scheme of things, big money looks at this and say, you know what? Look right here. What do I have? I still have bullish momentum. Day traders will be like, bro, this is ugly, right? We open up, we ramped up yesterday, we pull back, and now, we're here, and we bottom out around about 379, instead of chain at 380, ripped up toward 386, and now we're pulling back a little bit here, a couple points here, or a few points, not a couple, a few points into the close. But again, look at this from a big money perspective. Big money says what? We still in an uptrend, right? So now it becomes a game of duration. If your timeline, if you got contract, let's say you got contracts into Friday, like I do, I got like a swing contract into Friday, right? That position I bought, for Friday, of course, I bought that position down here around 379, right? 378, excuse me, 378, right? I'm willing to kind of sit on it and seeing if we can we already took out 384, not necessarily closed above it, but we took out that point of resistance at some point. And then, we faded back into it, right? Inside of it, so to speak. Now it becomes a game again of, if the sentiment is still strong, if this becomes a new area of chop or resistance to the downside at around right here, 382 down towards 380, you know, yeah, you can say from the risk on perspective, it's worthy of it because it's just what an accumulation zone. The only issue is the what now it's what time, right? The theta, right? If you option trading, the theta is ugly right now, unless you're selling, right? But the theta will be ugly if you don't have any kind of substantial movement tomorrow. You need the market to move tomorrow. Anywhere from where it may close, if it closed anywhere above 383, right? If it so happen to close above 383, you need to close Thursday or at least open up above that and just kind of move within maybe 30 to 70 cent range or somewhere around there. Hopefully, around 50 cents or better to equate for the the degradation you're gonna get in your theta tomorrow, right? That in itself still will obviously add a little bullish sentiment into Friday. Again, but you still gotta dodge all the economic data coming out tomorrow. It's like about 4 or 5 governors speaking tomorrow, right? You got jobless claims coming out tomorrow. You got a lot of economic things coming out tomorrow that's gonna really spook the market, right? It's gonna spook the market, right? And ain't nothing we can do about that, but providing the fact that the market accepted the ISM today, which is a major, I gotta say this here. The ISM data that came out today, that's a major key component of of GDP, right? Now it barely came in better than expected, but Wall Street, from a day trader's perspective, right? They say, well, that's positive. Now, on a bigger macro picture, given the fact that the GDP is trying to forecast a negative 2.1 growth for next, for this, latest read that's coming for the second quarter, that ain't enough to say that this, that GDP is going to be anything, under that negative 1.6 that we got the previous one. So we still within that range of negative 1.6 up towards negative 2.1, right? Even though the ISM was better just for us, it cooled off a little bit, but only a little bit, right? Only a little bit, right? So you take those things into consideration. Look at the bigger picture, the macro. Look at the market that's trying to find a way to get off the lows. Wall Street needs a reason to rally. They always looking for a reason to rally. I repeat, Wall Street is always looking for a reason to rally. This is the ideal of why they're having this level of risk on. I mean, these wild, jagged moves with this V-shaped, pullback, then V-shaped recovery, then chop zone, then breakout, then pull back. And man, this is some Tetris or something, right? Man, it's like playing the Tetris. But it's expected, right? Because this is the marketplace that's desperate. It's trying to save face. It wants to be able to kind of account for a lot of money that's already out there in terms of the open interest market. And so the market makers still got to do what they do best in playing, being delta neutral, right? It's just their goal to be neutral, much as possible, keep the market equilibrium and balance. So when it's an imbalance to one side over the other, they had to instantly go to the other side and try to buy that side of the market to balance the market out. And that's essentially what their job is to do all day, market makers, right? Balance out all this price action. And sometimes it causes the market being a stalemate. And you got chop zone. Sometimes they can't balance it, and then you have one side break out bigger than the other side, and then it just runs away until they can get a handle on that. And so until those things really kind of really come back in a little bit, expect a lot of V-shaped recoveries. Expect a lot of weird rallies, and then weirder dumps, right? Weirder dumps and things of that nature, right? And that's just the nature of markets at this point, because we've lost a lot of that cheap money from the Fed. We lost a lot of that security. That security blanket is gone, and jokers are trying to they're trying to get in where they fit in. Again, goes back to my little avatar up in the top right hand corner. Now, before all this happened, Wall Street was just dancing around, and then the Fed said, we're gonna start doing quantitative tightening and raising rate, and then investors jumped out there on that money treadmill, and they were lights out. Boy, shoes just went everywhere, right? It's lights out, right? So, but nothing that we're not prepared for, didn't even plan for at this point. All right, so we're just kind of seeing how this stuff unfold as it goes. Right. So yeah, man. So I hope you guys are enjoying this. I hope you guys benefiting from it as well. Of course, it's just moments to kind of really accept where you at in your thesis, and if you look at the market a certain kind of way, you just suppose it up against what you're getting from the economic data. What the charts may be saying, what the other investors may be saying. Just be cautious, guys. Just be cautious. Be vigilant of what's going on. Make sure you don't overstay if you don't feel like feel comfortable in these stocks, because it is an ABC type of marketplace. Always be closing, right? And there goes the market course. The market we've been closing on that last 2 minutes or so, but we closed above the 383 area I was talking about. Now it becomes a game of, okay, yeah, you need to take out possibly 384 again tomorrow, right? Because if you pull back and again you come back inside that chop of 382, inside of 382 to 380, that's still notable potential for Friday, setup. But it again, it's the ugly churn that you'll get caught if you're not able to catch those pivots right. You will get caught in the middle of the carnage, and then a lot of the money that you'll be looking to get just get mashed up. So make sure your pivots are notable. Make sure you understand your support resistance levels, obviously in this case, and from there, trade into the price action respectively. Right, trade into that price action respectively. All right, so that's it, guys. I ain't got anything beyond that, guys. I got a couple things to take care of here. That's our closing for today, right? We got the economic data that we was kind of waiting to see. The ISM came out again. The jokes came out. The PMI numbers came out. Everything was somewhat, hit or miss. It was mixed, but you had some slight beats, right? Which is, again, was good energy for the stock market. They utilized today to get them a nice little ramp, get above that 20-day moving average, at least breaking them through it, even though it closed below it. But again, y'all know how this stuff go. Any news that Wall Street can use to benefit from, to keep their sentiment intact, they'll use it. Right? They'll use it, right? And so that's just the nature of it, what we're dealing with and seeing right now. Right. So that's about it, guys. So I ain't got anything else, guys, before I get ready to get out. Over Chris in the building. Shout out to Over Chris. Right. Before we get ready to get out of here a little bit, Over Chris, come bless us, man. What you got going on? What you seeing in the market? What do you see? Right. How was your day?
Hey, peace, power, and profit, everybody.
Peace, power, and profit, Over.
Everything's good, man. Just sitting back, observing, and seeing what these cronies gonna do when it comes to the inflation and the rate hikes and everything else that's going on in this fugazi economy.
It's like when them sisters be got them heels, them cheap heels on,
Yeah.
and they be shaking in the back. If she make a hard turn, that heel. That's the market right there. Every bit of the market right there, boy. A pair of cheap heels, boy. You make a hard turn, boy. That heel coming underneath that shoe.
Exactly. So just observing that, and I did manage to get into a trade today on SPY, and it was
you made a nice little trade. Talk us through your trade, bro.
I mean, I originally seen that gap up, man. I actually got into it late, but and then I think it ran up and hit 383, and I didn't see it until I sold it at like 381 because I was busy doing some other stuff, and I had missed that. I missed a high at that time. So, but I was just watching the higher lows. And then because I think it gapped up in pre-market, and then it shot up real quick when the market actually opened. So I made a decision to jump in real quick, and gladly I came out and got a bag because I sure wasn't paying attention when I needed to be, but I still squeaked out some money, thankfully.
No, again, Birdie hand beat one the bush, like we said, and sometimes, time is of the essence. Sometimes, like I say, where I talked about that Tesla trade, I mapped the gap field. Remember, I posted in the group with y'all. I was like, man, this Tesla 650 gap field, guys, there's your gap field.
Yep.
And I was ready, but I didn't have my limit set right now. I didn't get filled, and it just took off. I was like, I can't chase at this point, right? Because Tesla already expensive. Right, the contracts are crazy expensive. Of course I can, buy them, but I'm like, dude, I still have, y'all know the stuff go, right? You want to work within what you want to work with, right? I don't want to chase price and chase price, right? The cost and the start the movement. So I had it mapped to what I was willing to pay for that value, that bump up, and it happens. But again, like you said, man, if you're able to still, squeak some out of an opportunity presented where you can catch that sentiment or that drift or that, you know, that trend, man, that's all that matters, right? So a little bit go a long way, you know, in
Right.
that perspective. So you clean the clock, you know, early in the morning too. You in and out quickly.
Yeah.
Yeah. I love that, boy. You just make that bag. I mean, I'm out. Right. So shout out to you as well, guys. Everybody, you know, definitely from what I'm seeing, you know, we had some nice trades, at least, you know, minimum $500, right? I ain't gonna tell everybody business, but everybody had minimum $500 in profit, right? Minimum $500 in profit, minimum.
Absolutely.
Right. So shout out to, again, those who are, you know, who were able to kind of get in here and make it happen. Right. And so that's what we're looking like going into tomorrow again, you guys. I mean, you guys see it, man. And you know, the bounces came out. Of course, you got a VWAP test. So that's actually good the way it came back and tested VWAP though.
Yeah.
As weird as it is, you like think about it, like, man, you hate that. But you know, of course, if you bind up in the 384, 385, it sucks.
Yeah.
But anytime you get a chance to back test certain moving averages or, you know, key points of you know, support, that actually bodes well, right, for the uptrend for most stocks, right? Because it takes out any kind of ambiguity, right? All the wicks, all the people who have buy orders or sell orders, and now going into the close, they have to kind of resettle the, you know, those orders. It takes those guys out, and now it's just a pure-handed, you know, holders, if you will, who are thinking that, you know, there may be more upward, you know, drift that may come into play. If not, of course, those who got short up near that 385 too, they living like, you know, like La Vida Loca right now. They're like, hold up, bro. We get this market to break down and go back towards them same areas I was talking about, 382, basically 381.96, down towards the 380. That's gonna be a nice little bag for those guys too. Right. So you're just playing levels. That's all it is. You're pinging up and down the different levels. And then hoping, you know, seeing what sticks, you know, hopefully, you know, you provide a little follow through with your positioning.
Yeah. I mean, looking at it now, you know, it did hit a low. It hit 379 twice in pre-market, 379.96, and then when the market actually opened, it was probably close to noon. It hit 379.60, and I think started to rise and go up a little bit. I would have, you know, been, you know, busy open enough to, you know, try to look at that and, you know, take a trade on that. But, you know, just like you said, you know, it's hitting levels, you know, it's basically mapping itself out. It's, you know, upon us to, you know, take that opportunity or that risk to see if we can get a reward off of it. So
yeah. And kind of like we talked about yesterday, you know, when we spoke about the idea of those levels, right, or areas of interest, I would say, and knowing that the 20-day moving average is sitting at around that 384.62 point, and you still had somewhat of a nice little you had some strength candles underneath it, you know, give or take, you know, at the point where the market utilized this whole, you know, holiday, you know, euphoria energy. I know markets like to rattle on some of these holidays, especially like Independence Day, right? They found some money from somewhere apparently. Right, but it wasn't pretty, right? You got to V down right at the beginning, you just slow off, and then you bounce, right? But if you think about even the bigger picture where we came from, you know, the previous Friday, you know, we was kind of in a chop zone, and then it broke out on the back end of the day. Right. So it came back, flushed those guys out, went down even a little lower, took out the guys even way back on that Thursday, found the bottom there. Hence, I was like, okay, this 372 area, the 373 area is very interesting, right? So I mapped mine up actually towards the 374, 375, because, you know, even though, you know, you have area here of interest, I felt more comfortable at around the flat line of the support at around 375. Right? It's strength there, right? As you see on the bar here, there's strength here, there's strength here, definitely strength here at around that 375. You know, I feel comfortable. That's above the VWAP here, right near that 20-day moving average at this point here for the breakout. After that, I say, okay, this is going to be a nice little risk on. We can close above that 375. You know, we'll see what happens from there, right? Because anything, you know, I say, you know, inside of that value there with these guys that sold off, you know, some of those guys right there on this side may not have taken profit, right? They may just be stuck. They got to hold the bag. So this is the moment to get bailed out, right? But it held, again, it just went all the way back to where we closed, and, you know, that was that, right? So again, we'll see. Like I said, we got some more, you know, some things to pay attention to. far as tomorrow and Friday, I'll be watching. Hopefully, things kind of run, work itself through the system tonight, because we had the I think European market actually did well today. They got beat up the previous day, but the European market actually did pretty well today. They was up over like 1%, right? And go figure, we end up closing above 1%, on the back end of our day, right? Like, these markets sneaky, bro. Y'all got to be watching these people. But either way, if they have any follow through in their markets tonight, and possibly the Asian market ain't all over the place, you may get a little bit, more bullish in drift tomorrow. But I gotta say, they got to get through that economic calendar tomorrow. It's going to be proof. Tomorrow's another big major day, right? With data coming out. So as of now, they're winning, and we'll see if they can keep that momentum going into at least Friday. Goal is take out those gaps. You've already got, one moving average scenario tested. You fell back below it. If it can, reclaim it tomorrow, if it was the fifth, we all be drunk, of course. But if it can reclaim it tomorrow, that'll still, again, bode well for bullish traders to stay risk on until something changes, right? Because they got what they needed to hear today for the Fed minutes. The rest is history, right? The rest will be history. And we'll talk about it, of course, and every time any moment we get to kind of build on that. But as of now, we're looking pretty, we're looking, I would say we ain't solid, but we look like we might want to party. Let's all get wasted. Like there's a song, right? Until something changes, we'll watch those levels and see what comes from it. All right. So that's it, guys. I don't really have nothing else outside of that, man. Like I say, again, what a day, right? Well, just watching the market here, just kind of, bounce all over the place and, try to find its way. And we'll see again what comes from this stuff when it's all said and done. All right. So y'all got any last words, guys, so we get out of here? Any last words for the fam?
What you think about Dr. Foods and ATRX? Over.
I will tell you, I need to do a separate video on that, because I got to dive into that one, boy, because it's going through. I was talking about it earlier. I don't know if you posted in the back chat. I was talking about how that whole marketplace is now kind of, even though their use case is still solid, but the broader market taking a turn for the downturn does not bode well for a fledgling company that's still trying to get their books in order, right? As they say, timing is everything, right? It has something unique when we think about the same way when we look at like a Beyond Meat and all those different things, but the market ain't really caring for specialty items, right? They don't want to pay that extra cost. Not saying that's the complete scenario, of course, but we know this is a very niche market in terms of shoppers' discretion and investors' discretion, right? Two separate entities, but they are very well intertwined and woven. The value that Next Meats offers, the market, being international, but also establishing that base over here, right? Because the whole thing they're trying to build is base out in the West, right? They got to deal with Wayback Burger, right? That's good, right? Of course, it ain't a Hardee's or something like that, or McDonald's, but it's a start, right? There's a lot of Wayback Burger chains, up along definitely the East Coast area here, and I think they got some of them out west as well. But they're in that fledgling state, right? Where if you're going to be the distributor here, distributors are up against a lot of stuff that we've been watching today, like ISM data and CPI, excuse me, not CPI, but PPI, producer price indexes, scenario like that, right? A lot of those things are on the market's back, right? They're riding the market, and it doesn't sit well for companies who are still somewhat in startup value. Now, even though they made their claim, in this publicly traded environment where they're trying to establish new shareholders, new institutional holders of the stock potentially, the timing is not on their side. Like we kind of witnessed that when we were thinking about like Lucid, right? These kind of SPACs that came into the market, and now they're like, well, you ain't really got no production, like you can't talk trash, right? Before they was able to talk trash, right? Because it was like ideal of what they could become, given it the market was still very liberal in terms of how they're just throwing money at each and every stock. Now that's not the case, right? So Tesla looking at everybody else, like even like Tesla, like bro, y'all ain't about that life. Y'all ain't went through what I went through. Y'all not finna survive if y'all can't, start to really get your affairs in order during this downturn, because they're not, some of you guys may not even be around, right? And so every time a bigger conglomerate scenario make a powerhouse move, like we witnessed even with Amazon today, taking the role of adding Grubhub to their portfolio. Imagine that they added Grubhub to their portfolio. That messed up DoorDash whole little flex, right? Because how you gonna compete with Amazon type of money? Make sense? So they're making Grubhub, or at least a portion of the Grubhub business, a part of Prime holders. You get somewhat of a benefit, right? If you're a Prime member. So now I'm just using it as a case that part of Prime holders. I'm gonna get his mic. Yeah, that makes the market start to have this normal now where it's starting to it's starting to consume itself, right? All right, you got the whole issue with Microsoft this morning. What happened with that, right? European markets trying to hit them up on competitive antitrust laws, because they think that deal would be with trying to buy Activision Blizzard bad for a lot of smaller competitors. So you're starting to still see a lot of things happening on even the legal side. And I'm saying all that to say this, even when it comes to specialty markets like that of Beyond Meat, right? Because y'all know they've been fighting the uphill battle ever since they came into the market. They had a moment to kind of really kick back, and make a lot of money when the stock went to ramping. But then reality kicked in. Okay, now you got to go to work. So a lot of these companies now that has great potential, they got to go to work up against a market that's very restrictive at this point. Right? So these pullbacks that are notable when you have stocks that run up over 700%, 1,000+%, because that stock had ran up, of course myself, I was up, it was up over about 7,000-8,000%, right? From where I got in, of course, at 0004, 0007 area, where you guys end up getting, I think y'all got in around about 004, right? And right around that time, I think I was kind of saying it to the family, and it went up to 4 pennies, right? It hit like 4 pennies and 2 pennies, somewhere around there, which is a nice bag, right? That's a lot of percentages, right? Yeah. And then it just kind of went right back to that starting point, right? Same thing we kind of seeing with Netflix. We're seeing it with Teladoc, all these different stocks like that. Now, of course, there's not no Teladoc or none of those type, granted, but it's still in an early startup phase, right? So they didn't have a chance to put away a lot of money like a lot of these companies do. And they spending money, burning cash in order to get solidified, right? But the use case is somewhat still intact until something changes, right? It's just that it's going to be more of a like I think brother Sonny was talking about that company Zomedic, same scenario, right? That stock was way up there. Now it came down and hit like 27 cents, right? And you got people, a few people talking about it maybe on the mainstream side of things, and they're like, yeah, just bad time to be in the market, because timing is everything. So like anything, you got to be comfortable in knowing that, if you find value in something at a higher price and it has propensity to really do some good things up against a competitive landscape, you should possibly still like it at even a much more cheaper price, right? Unless something changed on the management side of things or the C-suite side of things. If those things are not a big problem, and you can say, okay, well, yeah, even if you bought a little bit more higher than what it's at now, right? It depends on how much, of course, that does matter. But if it's still value there, then I'll just say, yeah, just be patient, because you can only you can't lose any more than what you've already probably put in at that point if you don't add any more, right? You could just be more critical on what you feel like you may give any extra to that opportunity. It becomes a game where the management again has to prove itself, right? We're seeing that right now with AMD, like AMD make that turn for the upside, and then what happened, right? We start ramping, right? Because y'all know beating the drum on AMD when we got over towards that $80 area, 80, 85. I said, oh, I'm definitely, and it was going into earnings, I'm buying calls, right? And we ripped, right? We got our little pump, and then again, lo and behold, we know we up against a lot of pressure, because the semiconductor space is still blown up, right? Taiwan is still ratchet right now. China, man, y'all know the whole energy over there just ratchet, right? Like a bomb can fly any day over there, even though it don't even seem like it, but it just really messing up from the supply chain issue, even with the xenon gas that they need, right? And the neon, all that stuff that they need to make the semiconductors coming out of Ukraine. Who knew, right? We did that research on that time and uncovered that. That market jacked up because the war in Russia. So that whole, lane is just like, unstable. Turns out Apple had to somewhat scrap their M1 chip. Who knew, right? They didn't scrap it altogether, but they had to pull back from trying to utilize it as a revenue generator for for within the portfolio, because they didn't have enough supply. So they had to pull back and trying to offer it. Who knew, right? So that whole area is just messed up. So I'm saying all this, when you look around the markets for certain specific sectors, there are going to be some areas that can weather the storm, and there are going to be others who are going to be like, okay, bro, every day that we don't fix this issue, it's very costly, right? It's very costly for them, right? From a raw goods material perspective, from a manufacturing perspective, all the way up to a package landed SKU item that can go on the shelf, right? Hence, Apple having a lot of issue with even with their iPhone sales right now, right? In and around China, right? So y'all know earnings getting ready to come like the next week and a half. I'm going to have a nice little bag waiting to trade some of the earnings, right? Because it's going to be, it's going to be very interesting. That's all I can say. It's going to be very interesting, right? Netflix, again, think about that. When we make that Netflix trade and we clean the clock on Netflix, they up against the clock again about another, 2 weeks. Imagine what y'all think Netflix going to do, right? So it's going to be a lot of things going on in this marketplace. At this point of the year, we at that biannual report card, reading of what do we look like as far as being equally balanced between debt equity ratios with a lot of these high flying stocks, the global market as a whole. We know our GDP is contracting, meaning America's economy is kind of taking a turn for the worse. Then we're not in the clear, right? Until something really, really gives us a signal that we can start working from, right? So a lot to take in, guys. I mean, nothing that we haven't been discussing, because we're going to keep talking about it. But, man, between that one and even AGRX, right? AGRs had caught a nice little bid on the Roe versus Wade. And what did they do? The same thing we already knew that they having problems with, right? They need sales. Good product, bad sales, big debt. The stock went to ripping. Management did what? Offering, right? Here we go, the offering, right? They need cash. $24 million cash offering, right? Killed the momentum, right? Stock was up there $2 and change. Stock pulled all the way back to 60 cents. Like, you couldn't make this kind of stuff up, right? So it's like, but it's to be expected. Why? Because everybody's cash strapped. They hungry for dollars, right? The cheap money, is gone, right? The thrill is gone, right? That was a cool song. That money gone, bro, right? Feds, the Feds shut down the door or the saloon. Jokers gonna have to find a way to get liquored up on their own. It's just no other way around that, right? And so, as I said earlier, if you found value in the stock that was, possibly a little bit more expensive than where it is now, depends on how much, of course, and you still like the story, be it growth or be it somewhat of a cyclical value play, then you should like it a lot cheaper. But again, to what degree, how much cheaper? That matters, guys. It does matter, right? And things that are cheap ain't necessarily great buys too, right? So you got to be able to kind of really parse straws a little bit here and figure out which ones are going to have staying power, because a lot of companies are not going to come back from this, right? And we're just getting started with all this recessionary talk. Imagine what it looks like if we are in the thick of a recession and more layoffs start picking up. Think about that, what that's going to look like, right? And a lot of these companies need boots on the ground to help fulfill their mandates, right? If they got to let people off, that's going to slow their plans to fulfill their goals. Especially if they got like a timeline. You got less production. Less people working. You're going to have, less output, right? So that's why Tesla doing took the what they call the brunt early and said, you know what, we dropped our delivery numbers, but guess what we also going to do? We're going to shut down our Berlin factory and Shanghai factory like ASAP. Why? Because we need to iron out all these problems we need to get flushed out now while we're in this ugly time. Because once it get really crazy, we want to make sure we still can compete, right? So it takes that level of management to make those kind of power moves and not look back, right? The same way we say Jerome Powell should have stopped printing money literally over a year ago.
Mm-hmm.
So I'm saying he had a chance to, and he chose not to. That's a person who's y'all know what it is, right? He got bit by the greed, but he thought he knew more than what he thought. What he just professed turned out he was 100% wrong, and we were right. I'm excited. I'm gonna keep, but man, we were 100% right. We were right. Right? We knew this day was coming. Right? We were saving that bacon. So that's what we're dealing with. So a lot of stocks, guys, be cautious. Whatever you like, make sure other people are willing to want to invest in it as well. It's called investor sentiment, or again, price action, whatever. You need buyers, guys, and this is a marketplace that's going to be very tight.
Right.
It's going to be a tight market. You're going to need, the big guys even get hit across the head. So you know what that's like if you're a smaller player, right? So it's like, dang it, man, we can't win for losing. But it comes with the territory, right? It comes with the territory within this space. For a lot of, like I said, for what it's worth, I just hadn't been adding to none of my positions. The only one I added to recently was AMD. It got down to that 70 area again, but I talked about that stock, way before even, when it was at around certain areas. But other than that, I haven't added to none of my long positions, and I don't plan on to.
Yeah, I got 5 shares of that AMD. Hey, how you what did you find that put the call ratio when you looking up on bar chart? I do
it's in the bottom. It's you said where to look for that? I'm sorry.
Yeah, on a symbol, like if you put it in a symbol, like I got a NVIDIA in here right now. How do I find that?
It's at the bottom. Go to bar chart and hit the options tab. It's gonna be at the very bottom.
Option tab.
Yep, it's gonna be at the very. Hit that option tab on bar chart. It's gonna be at the very, very bottom. You'll see it because it's gonna be like, it's gonna say put the call ratio, and you're gonna see the matter of fact, I can show you real quick here before I get ready to get out of here. Let me. What's going on, fam? We got our brother Jermaine in the building. We also got Overset Tupperah in the house. Shout out to the fam in the building today as well.
Right? Peace to the brothers
coming through, man. What's going on, guys? How's y'all day, man?
So. I had bet opposite of your advice, man. I ain't gonna hold you. I said I had some time, but she looking skeptical right now. I got that 370 put on SPY, so she looking skeptical. Okay. But we'll see.
I got you. But you're trading, momentum. We're trying to catch those pivot points, and that's why I say, man, those pivot points are so vital. Given the fact that we are in the marketplace again, that's just very skittish, right? That's why we keep trying to hammer the idea of always be closing, right? The ABC value within the marketing value is the old marketing term, but it bodes well for a marketplace like this because it just people are not willing to kind of it's just not a moment to kind of really trust, right? Market makers, algos, right? You got all that kind of that ambiguity out there in the marketplace that wants to kind of it wants higher, but it's just not able to handle higher. Right? That's how you gotta look at it. It wants higher, but it can't handle higher. Now the same would be on the inverse if at a point where they say, okay, well, we're gonna try to put risk on for this week, and you saying, well, okay, I still have a short bias energy, right? Because I'm still net short the market, right? I made very clear I'm still net short, meaning I'm still bearish on the market. However, those pivots are going to be very demonstrative, or they're going to have to be very, laid out in a way where I know my levels, my zones, and from there, if I'm able to top tick the market, like today, right? We got up to 385. We broke above the level I talked about yesterday. I said we're going to go above 384 potentially if we can keep this bullish drift intact. We overtook it. We didn't close above it, but we overtook it on the intraday chart. Now, Wall Street saw that too, right? So, first thing came to mind, okay, we took our way to like 385 and in the 385.60. To them, they're like, oh, man, we're reading the register on that, right? That's a massive move from 375. Literally, actually, I'll take that back. From 373 to 385 in a day and a half. Let that marinate. That's a lot of money for if you got a lot of contracts on a bullish side. Now, on the flip side to that, it's like, okay, well, yeah, for now, that's your new That's your new top tick high until it changes. So you either get chop zone or you're going to get a little pullback and back test some of those areas of interest. Now, to get a move, like say for instance, if you bought the 370s, just hypothetically, of course, you're going to need the market to really open up, right, to the downside, right? So you're going to have to bank on data being more problematic than this bullish energy of wanting to overtake a certain key level of a gap fill or resistance point that's close to. Wherever the market is closest to, in terms of area of interest, 9 times out of 10 market makers are trying to be within a value of being neutral or neutrality. They're going to try to take the market towards those areas because traders are going to try to trade up into those areas. The further you may be from a point of contenders that you may be liking, you got to factor in all that energy of people being closer to a point where they think they can reach this area faster than you can hit yours, right? Now it becomes a game of duration. If you don't have enough time on that contract, the theta gonna be what? A headache, right? It's gonna be a headache, right? So a lot of this stuff is timing, as we say, time and money, right? The greatest mathematical equation ever, right? Time over money. That's exactly what you're up against in this kind of marketplace. That's always trying to close big moves, and it's trying to navigate and dodge economic data that's coming out every day to show that this ain't the kind of marketplace we're trying to buy what, just buy indiscriminate like we were doing back in 2020 when they were pumping, and 2021 when they was pumping money, meaning the feds. They cutting that purse off now, but Joker having crackhead withdrawals in the market right now. I'm seeing Jokers in some of these message boards. I have people email me a lot of people, man, from down the line, up and down the line. And I'm like, bro, what do you think about this? What do you see? I'm seeing this. I got this strategy. I'm like, I'm looking at this. I'm like, bro, I know what it's like, because the one thing that that's the biggest elephant in the room is the liquidity issue. Markets are drifting to the upside on very minimum volume that we were getting at a point when everybody was hands on deck. If you up against algos, mid to low volume, economic data, what else? What else we could say? Again, a global market that's still in flux, state of flux. You got deterioration of global markets. Europe is deteriorating faster than anyone we even began to think about right now. And they're trying to keep that stuff hush as much as possible. Why? Because Europe is a big ally of America. They are somewhat the real true banking district of America, right? They're the old school bankers, or I should say. So a lot of this stuff is really becoming a problem because this Russia-Ukraine is going longer than necessary. That's a problem that still needs to get fixed, but they figured out kind of how to work around it for now. It ain't doing well for us at the gas station, at the grocery store. But those things were a problem before that war kicked off. So they eliminate that excuse, right, from Biden. This is just bad management across the board. You got bad management in Europe. You got bad management here in America. You got bad management in some of these more lesser countries that trying to, and they were already struggling, right? They definitely couldn't take no L's. And then China, right, our closest competitor, they all over the place, right? Because they're saying, okay, this is a moment where we need to get our house in order. We still got to fight COVID, but we get a chance to play chess against America. They need us more than we need them. See how that works? They playing 4D chess with America. If they lock down, we stuck. If they say we're not going to open up our ports 100% capacity, we stuck, right? If they keeping Taiwan scared because a war may pop off with them at any minute, and Taiwan's already hurt because they need raw commodities from China and places like Ukraine to build semiconductor chips, right? That's their biggest market, semiconductors. They stuck. We stuck more on that because what? Our semiconductor industry, what goes into cars, computers, y'all get it, right? I mean, y'all see this supply chain, right? That wheel. Like everybody caught on that same hamster wheel, right? And some people can't hang, right? They just jumping out like they just straight kamikaze. I can't deal with this. I'm out. They can't hang. They don't have enough money. They don't have enough, whatever, right? Shareholder backing. So everybody's up against that kind of guillotine. And for us, again, I can say this emphatically. We were waiting for this day. As weird as that is to say that to a lot of people, like, man, you trying to say you just betting against the market, you hate it. No, I'm being prudent. I'm not gonna let the market take away from me that I built up, and trying to be very, conscious about. I'm not gonna let the market just take that away from me if I work hard for it. Like, so again, I have no problem being excited that I was able to sell some of my Tesla shares over 1,100, and then some again over 900. The same way with Moderna. We talked about these trades. I was happy to take profit on the trades now. Same thing with Rich was saying today. He was happy he sold them the video calls early. Even though you could have made a couple extra pennies, but then it pulled back at the end of the day. Right?
I did break even.
Yeah, bird in hand beat one in the bush, right? Chris hit his early this morning, real early. Made him a quick little bag. He was done for it.
Facts.
Right? This is that kind of marketplace until it changes, right? So, again, every thesis has to have a contingency plan. So I always say, if you don't have an exit strategy or entry strategy and an exit strategy, don't take that trade right now. Why? Because if you chance it up against these rabid dogs of Wall Street, these analysts, they hungry. They like wolves, and they really some wolves now. but they real some wolves out there now because this it's scarcity out there, right? It's scarcity in the marketplace, where before it was what? A plethora of what? Just free money. Retail dumb money was just what? All over the place. Now retail dumb money, what? Running out of stimmy checks. They running out a lot of what? They little meme stocks or what? Like, you know, they're in a crackhead phase right now. They can't get what they want. I mean, it's that kind of marketplace, right? As the living legend Jeremy Grantham, right, has said many times, when you're going through that, but the bursting of the bubble, and what happens is the market takes certain individual sectors out, certain people out, and put a bullet in their head one by one. That's exactly what's happening to the market right now. It's hitting certain ones. Look what's happened again to Netflix. Netflix went from 700 all the way down to like 100 and change right now in less than 6 months. Like, who would have thunk that, right? You know, I mean, we can go down the list of all them stocks like that. So it's not even like it's even up for debate. That's what's happening now. Some people are getting their ticket punched. Airline industry, they just not starting to hit their funk. Why? Because they did a boomerang dagger. They took the draconian approach, listened to Joe Biden, forced their pilots and their stewardess to get what? A mandate jab. And they couldn't really weather such a scenario like that after dealing with COVID, shutting their business down. Now you're making it hard for your employee, and then people start walking away from the job. Now you got what? Cancellations. Every weekend, there's like thousands of cancellations. Somebody make that make sense. On the busiest travel season of America's history, or in this case, when we say history from year to year, it's during the summer months, and you can't even get people from from one destination to the next. Imagine the amount of money they lose right now in the airline industry. And they did it to themselves. Ain't that something? Right? So it's a domino effect across the board of bad fiduciary responsibility from these management side, C-suites, all the way up to the government, and how that plays into global markets and what they're doing or not doing. If they suppliers of what we need and we can't get it, and they chose to what? Slow production, we're in trouble. Hence, the Saudis ain't really finna pump no extra oil. Joe Biden wasting time going over there begging on his knees. Them people already told him the first time, get out of here. He going back over there again, begging for more oil, right? You could make this stuff up, right? So this is the competency that y'all witness in real time. We're getting a crash course on economics. We're getting a crash course on civics. We're getting a crash course on social integration from a global communal perspective. These companies are circling their own wagons. These nations are circling their own wagon. Now saying, guess what, bro? We ain't finna be giving y'all that right of passage to come in our nation and utilize all our commodities now. We finna shut it down and utilize this stuff for ourselves, right? It's bad enough that things are bad where it is. We just can't be giving y'all first deals now. So it's not the kind of market that we want, but it's what we kind of planned for at this point because we knew it was coming, right? And so they kept lying. It's transitory. It's not bad. Inflation is good. They threw everything they could at this market to try to get people to stay risk on in the marketplace. And all people did was let's lose money. Right? Yep. They lost a lot of money. Think all the people who were buying again.
Buying the dip.
God, dog. We talking about what? Joker was buying. I mean, Teladoc over 100 plus. It's down. A firm was up over there 100 plus. It's down to like $15 right now. Like, how you gonna tell your wife that? You know what you do, bro. You talking about a long staycation on the couch, boy? You been on the couch a long time, right?
That's a L, boy.
So we're seeing all this stuff, and it ain't happy to talk about it, you know. But hey, we ain't gonna play dumb like we didn't see this stuff, right? Because we saw this stuff. I know we were talking about this stuff literally over a year and a half. I can say that with my chest. We were talking about this stuff over a year and a half, near 2 years. Even when COVID first kicked off, when we began to do our whole breakdown on the COVID vaccines, and we mapped that out. Like, bro, we ain't finna jump out that window. All right, we're gonna be methodical in this. We're gonna be very cautious. We're gonna spend when necessary, and we're gonna be prudent and patient when it's time to be patient and prudent, right? Because the market is waiting. Again, we were born at night, but not last night. All right. So that's just what it is, guys. So just understand the nature of what you're dealing with. Don't overcompensate for a market that's not really want to give up that bag, right? If they ain't really trying to give up that bag the way it is, stay within a range, but you can play, right? Pay the plays, they say, and be safe, right? Be safe in that regard, right? But yeah, so that's just it, so just something to think about going forward, look, they want to win, but they just got to prove a whole lot. So in order for them to be in a position where they can, really convince themselves that, they're winning. Because right now they're losing, but they're trying to paint the facade that, that they still winning because the market is not lower than what it could be. I don't necessarily know if you can call it a win, because things are just starting to really unfold in the way where it's starting to show that it's better than than they really plan for it to be. So they can't fake it till they make it at this point, because the data is up against them. Right. So yeah, the market right now, like, okay, yeah, we'll take what we got. We'll be happy that we, at least 330 right now, right? Or 340, 320. But we still not in the all clear, right? We are definitely not in the all clear yet. So just keep that in mind, guys, when you're out there looking at this market. That's it. So yeah, so that's it. So what's going on over in Tupperware? Is he in the building, man? I don't know if you able him or over Jermaine. I know y'all came in. I want to give y'all some mic, man. What's going on with y'all gentlemen today? You there, brother?
Yeah, I had already spoke. I'll let the brother speak.
Yeah. So what do y'all see? What's going on over Jermaine? Where you at?
I'm here, man. Like I said, I got my concern is this 370 put. So I definitely heard what you said. I took the advice, and I'm definitely gonna be looking at the data and all those different factors that might weigh in, and hopefully make this thing go south.
Yeah. It's just a marketplace that's it's a hard pivot kind of market. And we spoke about it before. Just kind of real quick here before I get out of here, I want you to just look at this thing one more time here. These hard pivots are just going to be like golden, right? Because the algos are playing into them too, right? And they're saying, man, again, it's coming off the bottom here, the 373 area, 372, whatever. Like that's a week worth of work right there. They got in 2 days. If the market don't do nothing but chop for the last 2 days, and they can keep this thing above again these certain pivot points like this 380, 381, whatever, anywhere around that 375, down towards 375, excuse me, lower here on the hourly chart. But they're just trying to eke out wins where they can. So you have to catch the energy or the momentum when it's surging, and when it's not, you got to be very tight, especially coming into an expiration closure. In this case, like we got a Friday one, excuse me. Now you really got to start, thinking to yourself, okay, well, what's the probability of us backtracking some of this energy, right? That they've made, I don't know, maybe if you want to say they made a kind of declaration that they're trying to establish them some new supports to get off the lows to try to continue their bullish drip, right? They're trying to play back towards areas of interest. This is their area of interest now that we're off of this area here, the 362. The next line in the sand becomes the most recent low, where I always say those recent lows. Like real quick, I'm gonna throw a line across that thing real quick, so y'all see exactly what I'm talking about. This right here, this is our new that's gonna be our new line in the sand until something changes, right? Matter of fact, I'll put some little weight on that thing and beef it up a little bit. Solid line. That line right there, that's what y'all want to focus on for at least until the end of this week. Now, yeah, it's not gonna say that it's not probable that we can come down and test that again, but the more these big green candles right here hold this table up, right? This old rickety table up, there's some strong legs right there. I'm just gonna be honest here. There's some strong little green candles right there. Now, they can get taken out, but as of now, they're strong. And that's why I say this area right here, this 381, 380 area, at least at that point, you want to be focused at, if you're gonna buy any kind of pullback here, you won't want to try to play closer to that area as opposed to maybe a little further down, because you're going to need some really, really bad news to turn the market and take out these guys. It can happen, but we're dealing with probability, and you're up against time at this point, right? Because time is definitely a major factor, especially when you trade options. But again, just the broader market sentiment as a whole, because they're saying we need the market to be at certain levels, right? Or we're going to pull liquidity that we have because we didn't hit our mandate or our goal. This is what the big people are saying. JP Morgan, the Credit Suisse, the Barclays, right? Those type. They're using timelines even with, regular common equity shares. As to say that if they're going to put risk on, they need adequate movement. If that movement is not substantial, they out. right? They'll use this 1 week just to make them some bread, and then they'll say, you know what, I'm out, right? Like we gave y'all a chance, retail dumb money. Y'all didn't, pull y'all into the bargain. We out of here, right? To the next piece of what news come out. And so this whole month gonna be like playing dodgeball. You got big data coming out. You got GDP, you got CPI, you got PPI coming, right? CPI is what, next week, right? That's next week, right? Now it could be a hit or miss on that one. I'll be honest to say, I was talking about it yesterday. It could be hit or miss. If it come in anywhere a little bit lighter, they may try to use it to rally, but it has to be substantial, because we already know the market now in terms of even with CPI, PPI, it's now in a what? It's going to be in that rolling market kind of what data output. It's going to have big peaks. It's going to have what? Some nice little pullbacks. It's going to kind of go through that kind of what? That regimen. All it's doing is doing like a chart would do. It's trying to build what? Support. That's sad, ain't it? Inflation building support anywhere above 7% is not good. Wall Street will lie to y'all and say, this is good. We pulled back from 8.6 to what? 7.7. This is good. Inflation is peaking. Finding a new house, right? It's building a new house. They're breaking ground above 7. Right? Bro, like we ain't winning. All they is gonna force the Fed to have to stay longer, and they mandate and raising rates to bring inflation down. They're not gonna meet this 2% target. They lying. They telling y'all they're gonna meet that target by what, end of the year. Ain't no way on this earth, right? Ain't no way they're gonna meet that target. Wall Street is playing the game of, okay, well, maybe not, but we just need the Feds to slow down a little bit. We need, we need people to come and get attracted to the market again, right? Because their greed knows no bound, no end. That's typical. When you've been spoiled for almost a whole, be honest, the market been spoiled since 2008. Well, 2009 to be exact, but the market been spoiled ever since then. Like it's that kind of messiness. And then you had a COVID helicopter money drop. Man, look, these jokers have a hard time, boy, letting go. So the more they fight the Fed, the more this gonna drag out. Now it's good for day traders because we get to eat all the volatility, right? Day traders make their money when markets open up during the intraday expansion. You need convergence to happen at the point, and then some nice divergence when things just open up. Kind of like what you got right here. The market did what? It bounced at around this little low area here, even though you had some nice little uptick in between. But established a notable support that wasn't hard to read. Everything at this point here became what? Risk on. And you crossed above, some nice little purchase points in the way you kind of moved up to the upside. Catching this bottom here is golden for a day trader. Think about that. We're talking about literally 2 days. You went from 373. You had a back testing here that confirmed the trade. Clear state, that's back testing. And you went from 373 all the way up to 380, 385 and change in under 2 days in a short trading week. Like that takes patience to sit through all that. But the way I was planning, I talked about it. I'll say, God, this is why I'm kind of bullish on this next, this little double bottom. Just after holiday bullish drift, whatever you want to call it. Right? These people need a reason to kind of get risk on. They need to keep the market off the lows. So there's a lot of things going on there, right? It's just that the bullish energy has to work twice as hard to save their value more than the bears have to fight to keep pushing the market down. If you got long duration inputs, you still winning. Right? Anything further back, beyond these little gaps back here towards 390, you still winning. They offered the greatest opportunity to put on new puts when we hit 416 and stalled out there, right? Because I bought my puts right up here too. But I was loading the boat in puts. Every time we pinged and hit that level there and we hit resistance at 416, I bought more puts. And I bought them out like over weeks, right? Of course, in that regard, when I was buying them. And we got out inevitable dump here. It just flushed. I said, yes, payday, right? Let's go, cut the check, right? We bought them out all the way down here at 376 and then trickled down here towards 370. So that's all it is. It's just being able to kind of be conscious about, if the risk, really matches the reward from a probability standpoint, that the sentiment is all but certain it's in your favor, given how the market's been trading. And that comes with looking at the moving averages. It comes with, RSIs and all that stuff as well, the macroeconomics. Then, yeah, right? See, right here, we lost a 200 moving average here. It was an easy trade. Now I got short way up here, of course, that was just natural resistance, but the confirmation really came when we lost the 200 moving average here. Right? It's like, that's lights out. Right? You can't come back from that just so easily. Right? So it's like little things like that you got to pay attention to. Right? The same way now, see right here, even on the daily chart, what it's trying to do is trying to fight back towards that 200 moving average. It's closer to 387 than it is to 373 or 370 at this point. Make sense? So it's like the market is acting like a magnet, right? Y'all know moving averages act like what? Magnets. The closer they get to them, right? Or the further they pull away from it, the closer they try to pull it back to it. And the same way when it separated itself right here, see all right there, the energy away from that 200 right there, it start pulling it back towards it, right? The same way it did right here. See right here? Market ain't number one big memory or pattern. See right here? It did it right here. Look at that extension away from the moving average here, that 200, right? That thick yellow line. Look at that separation of degrees. It said, oh, okay, yeah, we get it. Wall Street sees that. RSI noticed it. And guess what? Buyers came in, pulled that joker all the way to it and got rejected, right? It got rejected, but it still fulfilled that mandate of bringing the market back up towards it. Hello, 200. Then it said, goodbye, right? Left it again. Now that, that extension or degrees of separation got much more shallower. Notice this, see that right here? That separation here is not this separation. This is bigger, this is smaller. And you have pockets in that where it kind of played and tightened it down, tighten it down, tighten it down. Now it looks kind of like it's almost but certain it want to test that moving average. Today's price action symbol, symbolize a little bit of that thing, that kind of energy, whatever, right? The news was somewhat in favor of it, but you got to play into that. You got to play into, what these other, I don't know, big money guys may be trying to signal what their purchases as well.
Right.
So you look, flow charts are good for that. Again, dark pool scanners, if you got one, use it, right? I utilize mine a lot. Of course, y'all know them dark pools, says a whole lot, right? In terms of, who buying and, you can't see them on level 2, but it signals how big money is buying behind closed doors that average people can't see. Right. So that says a lot. Right. So I need to start showing that a lot more too when I come on here. I'm gonna go to my dark pool scanner. Y'all can see those dark pool buys, and you be like, okay, yeah, this is why the market turning right here. Right. It's because they buying big tranches over there, hiding money.
Right.
Right. So yeah, a lot to take in there, guys, but nothing that we ain't playing for, that we don't know, that we haven't been, training for. Hence, repetition becomes repertoire. Go over this stuff till you get fingers get tired and your eyes get tired. All right, get that chart time in, get that fundamental research in. Build out your game plan in a way where at least your confidence level grows at the same level that the market is giving you all these awesome signals right now that you're seeing it being flushed out. You're now getting actionable intel. So if we ever encounter these things in the future at any one point, you'll be well equipped to deal with it better. Right? That's all this stuff is, guys. Just knowledge, right? It's just pattern and trends. That's all it is. Money chasing trends and money chasing patterns. Same with y'all we doing in the block on the hood. Money chasing trends and patterns all day in the block in the hood. That's all it's doing. It happens in the global market the same way, right? And if you don't have enough supply, what happens? Then you go across town, right? Right? You go across town or you just go without, right? Ain't no other choices, right? That's what it is. The market is in the crackhead phase now. It can't get what it want, and because of that, and the Fed messed up the money, right? Right? They messed up the money and joke look, bro, all right, we stuck until they get this stuff fixed, fixed. Right? So that's just basically what it is. So but we prepared, guys. We're gonna keep working it. We're gonna keep helping one another where we can. If you guys got questions, man, hit us up in the groups. Make it be known what we can do to make the situation better, man. That's what we're here for. We don't know it all, but we know what we know in terms of where we at in our stage and journey. If it could be useful information for you, we're happy to share it with you. Right? But get happy with I gotta stress this before I go. Man, get on them charts, guys. Right? Get them levels on your charts. Be disciplined. When you find them levels, them areas of interest, and you map them out, work with them. Work with them. Don't try to work against them. Don't do the work and then say bump that. I'm gonna go do what I want to do and put on risk and say I don't need them charts. No, you in the marketplace again. That's all about what? The ABC. What's the ABCs? All right, let me pull it down with them ABCs up there. Right, I got a big old reminder up there.
Always be closing.
Always be closing, boy. Like always, right? Like you're be in like drill school, right? Say it with me. ABC, ABC. Always be closing. Always be closing. It's that kind of part. Say it with me, because you're gonna need that repetitive value to save a lot of potential weird trades, right? The market's gonna be just weird. It's just weirdos out here in the market right now. It ain't nothing that y'all cause, it they cause this. It's their fault. All right. But that's it, guys. So we'll rest on that point, man. I hope it was useful information for you guys, something to think about. Keep your head down. If you need reader material, we got tons of it to give away. If you need stuff on moving averages, if you need information on what patterns and trends, candles, macroeconomics, business finance management, we got books and books on books on books on books on books. All right, let us know what you need, man. We'll help you out, and try to, get you what you need, or even explain it to you wherever we can. It's gonna make your scenario better. All right. So that's all I got, guys. I ain't got nothing else, guys. If y'all got anything else, man, I'm gonna get out of here. I got a couple of errands to run here on the back of the day, and hopefully things, if I get a small break tomorrow window, I'll jump on again. I know it's gonna be small tomorrow, but I got a lot of running tomorrow. But either way, if I can add value, I'll try. Right, I'll definitely try.
All right, sounds good, Oba.
All right, appreciate you guys. Shout out to you again, Oba Chris, ringing the register today. Shout out to you as well, brother Rich Boy, ringing the register today as well. Shout out to everybody else who were able to ring the register today as well. If you was trading the market, even if you did a paper trade and you ring the register today, you won. Don't let nobody tell you different, because you're trying to build confidence and courage in a marketplace that's very ratchet. And every time you able to put on a trade because you mapped something out and you did well, or you hit your mandate or your goal, that's a win, right? Eventually it will translate to real money. Don't let nobody tell you different, right? Stay humble, stay hungry, right? And stay persistent in your craft, right? To get better, right? All right. That's what this is all about, right? So that's just what it is, guys. So that's, focus on that every day. All right. So that's all I got, guys. I'll see y'all on the next one, man.
All right. Peace, power, and profit.
Peace, power, profit.
Peace, family. Peace.
Peace, brother Brandon. Peace, brother Rich. Peace, brother Jermaine. Peace, brother Temporary in the building. Over Sunday was in the building. Brother Mathis, we seen you. Right, our brother, who's this? Nessie, I don't want to mess your name up, fam, but Nessio01. Everybody tuned in, brother. Everything. Shout out to you, over Rich B. He came through. Fella B Humble came through. Shout out to you, over. Who else we got? Brother Vin Faction came through. Beggar Al came through as well. Shout out to everybody who was tuning in, who wasn't able to type or speak. We see you. We appreciate your view and your patient knowledge to this channel and this bill. All right. We see you guys on the next one, guys. Peace, everybody.
Peace.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
say you simply flooded the system with money.
Yes, we did. That's another way to think about it.